Can you guess where I am? I am super excited because we are launching DX100, formerly known as CIO 100, and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in and we'll see you in November.
It was a great starting point by identifying opportunities, new opportunities in fintech, and at the same time as well redefining what is actually fintech. Not only what we used to believe that fintech is financial technologies, but it's actually way more than that. And that was a great kickoff, and very excited to be part of the 2-day session.
We have come from Stone Age and we're moving into a digital age in the financial services sector. And so the opportunity that exists because of this transition is huge in terms of actual market size and money that can be made. So the return is attractive. I think the impact that it has on society is also huge. You've seen what M-Pesa has done, for example, in terms of financial inclusion. You've seen what digital lending has also done in terms of financial inclusion. So impact is the next big thing. And then I think third is that for once, this story is being owned by Africans themselves. And so that's exciting in of itself, that it's finally us. And you know, the story right now is Africa's economic liberation. And it's great to see that it's Africans pushing the charge.
Fintech is important because it cuts across all sectors of our economy. If you look at it, there's always money transfer in every sector. There's always transfer of value in every sector. Fintech comes in to leverage technology to, for example, create velocity of money, especially around industries that are inefficient in terms of how they exchange money. So it actually sits at the core of everything that we do as a people and as a market. And therefore, if we are able to leverage the technology aspect to be able to sort of create some efficiencies around how different value chain works, either in agriculture, in healthcare, in entertainment, education, you find that it touches all bits and it's able to solve certain very specific challenges that each industry is experiencing. The opportunity for us here then is how do you identify those challenges and how do you solve them?
I'm seeing a lot of companies that are setting up in the crypto space. So that's one that's growing. Although over the last few weeks it's all taken a bashing. Seeing a lot in the BNPL space and lending, and payments. Payments has been ongoing for quite a while, but that's ever increasing. And I'm seeing also the interest in trying to reduce the cost of remittances, etc. as well. So that's also an area because remittances continue to be on average 8-10% from the US, Europe into Africa. So I know many companies are looking at that. And increasingly, aside from those areas in fintech, there are areas that are growing in verification in areas like hospitality, for example, and rentals. So anyone hiring an Airbnb, for example, the host want to know who the customer is or are that are going to take up those. So we're seeing growth in those areas. But yeah, the fintech landscape in Africa, certainly BNPL is and neobanking. And good examples recently, customers are moving towards and switching to neobanking, and some of these neobanks are now keen to expand their services and offer the ability for bill payments and mobile commerce within the same super apps. So there's growth in those areas. I see opportunities in getting the financially underserved, into the banked space. So having traveled across Africa recently, there's still a massive opportunity in the space. And even at today's event, clearly the numbers show that there is a massive scope to get the unbanked into the bank space, and that will improve the space ongoing.
I think fintech in terms of technology is so exciting, and I think fintech is the platform that will allow for the future, in terms of accessibility to the digital medium that you need to get to customers along. So what is fintech? At the end of the day, fintech is providing a service to end users that enables let's call it the cashless society to get access to what they would traditionally never be able to access, because perhaps they don't have a branch close to them, or perhaps they don't have the ability to transact close to them, perhaps they don't have the data center perhaps close to them to transact. Now suddenly you have all of these fintech solutions that takes it through to customers on the form of a mobile platform, which really is an exciting thing. So, the theme of the fintech event is exceptionally exciting, and talks to the heart of our, providing our customers with the ability to leverage from their traditional legacy platforms, embrace modern technology and the modernization of apps, put it onto a single platform or single digital platform that you can really control consistently, manage consistently, have true visibility of, secure, and comply with your own internal and external regulations. So.
I think for me, we're really in an interesting space. I'm glad that we all survived COVID. We are glad that in Africa it didn't really take us down. We were quite resilient, and it speaks a lot, to the African spirit and who we really are, that we are a resilient people. And then it means then that we've got an opportunity then to rise up. As much as businesses were affected, the individuals still have the strength to move on. And you can see after everything has opened up, everybody's coming back to business, wanting to do more, wanting to do better, putting in a lot of time and effort to get the businesses back up. So it's a really exciting time to be here and to be in a space where there's a lot of attention from globally. There's a lot of attention by government, sometimes a little bit negative, but all the same, it's attention. It means there's something interesting happening in there. So the question for us is, how do we then drive the conversation towards value? How do we create collaborations that actually generate value, generate revenue for all of us? And most importantly, let us always do the right thing. At times where there's opportunity, great opportunity to pursue something, people want to be a little bit cheeky to get a quick buck. I think it has always been a long-term play. If we want Kenya to remain as the tech central for Africa and to still have all this global light shed on us, I think we need to maintain high levels of integrity in terms of what we build, in terms of how we interact and how we do business. We need to make sure that we are always compliant in terms of regulation, and just generally in terms of the investment that is coming into the country and into the continent. Let us make sure that we actually show returns for this investment, because that is the only way we can prove that we are worth what we are talking about.
bring them on because of a business that they're working with or connected to, can they serve multiple businesses, or they'll only work for that one business?
So now that's, when I mentioned, when I finished, I actually showed Francis in the middle of all these ecosystems. We want to create more value for this person. And whatever platform we're giving them, it's not an app. I think I keep on repeating that. It's just on WhatsApp. So they can actually, every activity has a conversation starter. So if it's actually fiber that I actually want to sell, there's a conversation starter for Safaricom fiber, Telcom fiber. So it doesn't matter who's actually reporting because we've already positioned this person. We are able to do this fulfillment on the back end.
Plans for the weekend. Fantastic. Welcome back, ladies and gentlemen. For the ones, our delegates here on the floor, thank you for being here with us. To our online viewers, we appreciate each and every one of you for also your presence online. Continue giving us the comments. We're looking forward to hearing from you. So we want to go into our next discussion, and it's a panel discussion where we're going to discuss about cloud banking. All right. And to take us through this particular session is a gentleman who has over 15 years experience in project management and delivery of turnkey projects in tight schedules and within budgets. He has worked across major industry verticals, including the public sector, financial services, and telecommunications service providers, and has been involved in all stages of project and program delivery, from inception and planning to audit and oversight. And I can say that I am honored and proud to have passed through the same company that he's working on. And he is the practice lead, intelligent infrastructure at Dimension Data. Ladies and gentlemen, help me appreciate this fine gentleman with class and poise as he comes to the podium. This is none other than Andrew Gojiri. Help me appreciate him with a round of applause.
Morning.
Good morning.
Can you hear me in the back?
Yes.
How many people have had coffee? Tea? Something stronger? Right, so first of all, apologies. I didn't get the memo, so I'm here dressed in anonymous businessman sync. So I apologize for that. Tomorrow I'll come with my sandals and shorts. So it is a great honor and a pleasure to be having and hosting a panel of industry experts and heavyweights to discuss a matter that is very close to my heart, and I believe very close to a lot of people in this room, because it facilitates what you do and the future for you, right? So, kick off. We start with one Mr. Basha Pile, who I believe is online. Somebody keep me honest. So, yes. Kick off. There you go. We start with one Mr. Basha Pile, who I believe is online. Somebody keep me honest. All right. He's online, so apologies for that. I'm sure the tech people at the back will sort us out. He's an expert in the industry. He's been doing this for more than 20 years. He moved from, incidentally, we were colleagues a couple of years ago, but he's now doing purely cloud consulting at Poprush Cloud and Consulting. He's the managing director. A round of applause for Pasha. I'd also like to introduce Beck Njagi. I got that right? All right, small bet going there, don't worry. See me sideways for details. She's the Senior Manager Strategic Initiatives at Diamond Trust Bank. We've talked about women in tech. She's one of the very fearless leaders in that space. She says she's not going to serve as NET, so good luck with that. Come to the board, please. Lots of experience in the industry, has been working at DTB, worked previously at Equity. Long history. Please have a seat.
Thank you.
I would also like to introduce our cybersec specialist. I know we've just had a whole section on security, but we're going to be looking at it specifically from a cloud perspective. One, Mr. Shalom Ojibe, to come on board. Thank you very much, Shalom. Round of applause for him as well. Thank you. All right, so let's kick off. As I want to believe, everybody in the room has had some impression of cloud. It's a word that is bandied around. It's a very sexy word right now. But I'd just like to take a moment to baseline, as it were, to get everybody on the same page. What do we talk about when we talk about cloud? What does it mean to you as a user, somebody who's leveraging the technology, as a fintech or as a bank, right? So for that one, let me start once again with Basha. You can tell us what it is, from your point of view, what is the cloud, and what does it mean to a lot of the people here?
Well, on that side, maybe just a thumbs up to give me an indication that you guys can hear me here. Yeah, great. So thanks, Andrew. Yeah, look, I think cloud has become the new word. You know, a few years ago it was IT, and you know, it was a broad aspect of what that comprised of, and we're seeing the same thing now from a cloud perspective. You know, as Boprush, what we do is we focus on enabling cloud strategies and cloud solutions for our customers, and that encompasses private cloud, public cloud, multi-cloud, and essentially what we call as hybrid cloud. And you know, that in essence, in terms of from an infrastructure to leveraging the services that sits on all of these cloud providers, is what I would tag as what cloud is today.
Fantastic. So you're talking about not just the hyperscalers, you're not just talking about the private cloud or hosted cloud, you're talking about that and everything in between when you talk about cloud. I think very important for that context, because sometimes it is misunderstood, right? We sit here and we think cloud is maybe the hyperscalers, your GCP, AWS, and those kind of guys. So right, so I'll jump right from there into our main topic, right? So cloud, is it an opportunity or is it too much of a risk, right? So the audit people, at this point in time, you're allowed to put your pens away and just listen. I know a lot of ears perk up when you hear the word risk, but for our purposes, I'll start with Becky, right? As a resident banker on the panel, right? So what do you see as some of the opportunities and some of the use cases for cloud in your business and specifically in the financial services industry?
Right. For me, I think in the banking space, we are looking at availing the banking services to our customers anywhere, anytime, on any channel. And the cloud is really going a long way to enable that, especially at a much faster speed than we did on-prem. Just thinking about the procurement process and all the setups that need to go into a new implementation on-prem compared to cloud, it's much faster, more efficient, and easier on the cloud. Over and above the customer experience being improved and our time to market, there's also the technical side of it, where the developers have a much easier time with the development activities on the cloud compared to on-prem. And obviously, we can't forget the part that the pandemic and working remotely played, because it definitely speeded up the need for us to implement and do things remotely, and the cloud goes a long way to facilitate that.
Fantastic. I'd like to pick up on something you just said there about the pandemic, right? So the pandemic really has changed a lot about the way we think about the world, right? Mm-hmm. And provision of services and what can be done and where it can be done, right? So in terms of your own cloud journey, mm-hmm. Has there been anything definite, or has there been any kind of major change in the organization in terms of how you see service delivery, leveraging the cloud technology? Or what are you seeing in terms of your industry, maybe in terms of the people who are here seated in FinTech, and the difference between how, as an organization, you have evolved and how that the pandemic has affected you?
Yeah. Just speaking generally fast, I would say the industry has been forced to change because, as you mentioned, COVID caused us to have to think of other channels other than the traditional branch-enabled process. So automatically, we had to start digitizing a lot more of our processes and availing them through digital channels. Over and above that, there was the need for more efficient and quicker turnaround time in the service completion. So for example, previously you'd go in and apply for a loan and you have to fill forms and do so much of a manual process, and it moves from one office to another. So the digitization of processes has made banks and financial service providers think very differently in terms of how they can achieve that faster and give a much better customer experience.
Fantastic. I know you're looking at me looking at all the loopholes that you can close. So maybe you can give us your thoughts on that in terms of what you see. You are in the industry, you are advising clients in terms of how they can move to the cloud. What do you see there are some of the drivers as well?
Some of the drivers are efficiency and competitive edge. You have, when you're moving to the cloud, it's important to know that you have a team of researchers sitting behind, trying to ensure that they beat their delivery time in the previous week. So those are the things you're looking at in terms of from a technical driver point of view. Now, if I also talk about security, you definitely need to worry about your data. You definitely need to worry about who has access to your cloud. And it's so interesting when you read a lot of cybersecurity reports, it's as though Africa does not exist, you know. But we have providers here who can actually give you African statistics on the cloud security landscape. And I believe we'll get more into that during the conversation.
Fantastic. Basha, I think it will be also interesting to hear a bit of your point of view here, specifically around use cases. They have talked about some of the technical things, the efficiency, the agility, those kinds of stuff. Have you seen any kind of unique use cases that, especially for the FSI, for fintech and those kinds of guys, that you'd want to point out in terms of movement to the cloud?
Yeah, great question, Andrew. I mean, maybe just to step back on some of the comments from the other two panelists. I think and I often speak to this when I speak to customers, I think what we see now, and excuse the pun, but is a perfect storm that's essentially emanating around cloud and cloud solutions, you know. Between, you know, as mentioned by Becky, between the impact of COVID and organizations needing to essentially reassess and pivot their business models, we also seen the huge investment from the building of new data centers and hyperscalers on our shores. And all of these is culminating in that perfect storm. The drivers, as mentioned, are still the same. The difference is, I think, the lens in which they've been enabled is very much driven through digital and cloud-based technologies. If we come back to your question around some of the use cases, you know, specifically in the financial services and fintech space, the big opportunity is still around the shift of infrastructure into more of a hybrid or hybrid multi-cloud environment. Not everything will move into the hyperscalers, you know, due to regulatory and policies as well. But I think the big change there is it's not just the shift and lift like we used to see before. It's really how organizations are looking at the opportunity to migrate to also modernize a lot of their applications on the back of that. The biggest, I would say, from an applications perspective, is still sitting within the customer experience and customer onboarding side of things. So everything from KYC to hyper-personalization of offerings back to customers or end customers. And these are very much driven through the services that you can leverage on top of cloud, like AI and machine learning, or the ability to use data in far more intelligent ways to personalize offerings to end customers. The other area where I think there's a massive play at the moment is this cross collaboration we've seen across industries. So telcos are now calling themselves techcos. Retail is now saying they're doing into financial services. I'm currently working with a sport and entertainment entity that's actually derive new revenue channels through selling insurance products to an end customer. I think the exciting thing for fintech and FSI is that across all of these industries, at the core of it is still a financial service or financial offering of sort. So you take the massive growth that we've seen just in mobile wallets like Apple Pay and Samsung Pay and some of the local providers. I think every other industry is looking to see how they can leverage that use case in their own business models as well.
Fantastic.
Thanks.
So to hear our people speak, you'd imagine we should all be on the cloud, right? But that's not how the real world works. So I'll take a step back, right? So what is stopping us from moving all our stuff to Alibaba or Azure or AWS or any of these guys? So what are the barriers? What are some of the challenges that you've seen in terms of cloud adoption, whether private, public, hybrid? I'll start with you, Becky.
All right. I think the first thing that comes to mind is the technical expertise. So what's happening is we may not be having as up to scale the technical expertise that is needed to drive the conversation and actually implement the cloud adoption. And in most cases, you'd find perhaps even the teams that were working on-prem would be the ones expected to deliver on the cloud. So they will introduce the same approach that they had on-prem on the cloud. And obviously there's disconnect there. So either it doesn't work or it starts off but doesn't deliver the value that is expected. So I feel that's one of the barriers. Another thing is obviously the bank services can be quite complex. So it's not just a matter of picking it up and replicating it on the cloud. So there should be some level of strategy or vision that goes into your cloud strategy, such that whatever you're building on the cloud, there's actually a purpose or objective that you're having. So what happens is, obviously, because cloud is a buzzword, everyone is just looking to do it, but you don't know why you're doing it, and then obviously the teams that are on the end of implementing are just going in all different kinds of direction. So just having a proper strategy and knowing where you're going, what your organization is trying to achieve with the cloud adoption is really critical. So when it's lacking, either it doesn't see through, or whatever is done on the cloud is not delivering value. So at the end of the day, you find guys saying cloud is too expensive, cloud is not working for us, it's complicated, and all these other presumptions and perceptions that are there. But in actual sense, you're not incorporating the right teams, you're not having the right purpose or goals for your cloud adoption. Yeah.
Okay, very interesting point of view. And you've mentioned a couple of very interesting things. You've talked about skills, and I think the discussion around skills, and especially in tech, is an ongoing discussion, right? We know about this brain drain, we talk about the operational complexity, some of those hidden costs that some people may not be aware of until you move to the cloud, right? But I'd like to just take one of those and pick on you right now, Shell, right? Security. Every time we talk about cloud, or we talk about moving to the cloud, and especially when people think about the hyperscalers, people think about the security concerns, right? My question to you is these security concerns, and I'm going to separate regulation here because we've talked about regulation here, and we all know that FSI is highly regulated, correct? Right? And that's a conversation we could spend a lot of time on. But from your point of view, the security questions, the security concerns, what do you see out there? Are these security concerns real? Are they applicable in this market? What do you see in terms of what people are doing in terms of the cloud adoption journeys? What are the opportunities? What are the challenges with security? How can we overcome those?
Thank you very much. So I'll take an excerpt from what Becky said. In a lot of fintechs and in a lot of companies who want to move to the cloud, they want to use the same mentality for on-premise for cloud. But the difference with that is cloud is agile, and sometimes security is not necessarily agile. And what we are seeing a lot is because DevOps is agile, there might be security budget, let's say $500,000 for security, and because the security team is not agile to consume that budget, the security budget is taken away and being used for expansion. Now, expansion is good, but why would you want to expand your cloud estate without securing it? Now, if I give African statistics on cloud, and I'll do this in a journey to save on time, the first thing you need to do when you're moving to cloud is visibility. And I'll give an example. Right? We did an assessment for someone in South Africa at Fintech, and we asked them, how many web services do you think you have? And they told us 43. And after the assessment, we found out they had over 800 plus. So that meant over 800 plus attack vectors. So we have the team who knows one thing, and we have security team who is saying another. The second step, or in terms of your cloud security journey, you need to do is threat detection, right? If you were in the Cloud Security Summit 3 months ago, I had put up a statistic where over 353 routers in Kenya were infected with Mirai botnet. As of this morning, we have over 1,533. That says a lot in terms of attacks. And you see, as we are accessing the cloud, you're definitely passing through a channel. So ZTNA comes into place. So you need threat detection within your workloads, your APIs, your WAFs, and ensure that your DevOps guys are adopting security before they release it to the cloud. The third thing is governance. Definitely you need governance in the cloud. You need to know who is accessing the cloud. You need to know your north-south traffic, your east-west traffic, what kind of data can leave your environment and what kind of data is in your environment. And lastly, automation, right? As I said earlier, the traditional security is not agile, right? Honestly, the current teams right now are burnt out from a lot of security alerts, So how do you ensure security is agile? And this is where you now bring automation, to ensure that there are playbooks to flag down security violations automatically in less than a minute in your environment. Thank you.
All right, thank you. And I'm sure there's a lot more that we can consume when you're talking about security, right?
Yes.
So as you know, security is not technology, it's processes, it's people, it's the whole ecosystem when you're talking about it from that point of view, and specifically when it comes to cloud. And I think visibility is a big part of that. So I'll jump quickly because time is not really on our side. But I wanted to just and I'll start with you this time, Basha, right? So first of all, I'll ask a trick question. How many people here are familiar with the term shadow IT? Show of hands, shadow IT. Mean anything to anybody here? Shadow IT. Shadow. Yeah? I know it has nothing to do with whether you're wearing black. It is it's a term very common with people who are moving to cloud. And I'd like to address that, the move to cloud, right? So a lot of people are taking different strategies in their cloud adoption journey, right? Depending on where you start, whether you are a traditional bank, a digital bank, you're a neobank, or a pure fin server, as they are called. Basha, I'd just like to start with you. Just very briefly, what are some of the adoption strategies that you're seeing in terms of cloud in terms of the journey to the cloud? What are you seeing people doing? Which different approaches are people taking?
Yeah, thanks, Andrew. I think you mentioned a good point in terms of shadow IT and the need for internal IT within a lot of these organizations not being agile enough. And what emanates out of that is each of the various departments, whether it's your marketing, your dev, or any other department, starts leveraging their own way of going forward because they're just not being serviced well enough by IT. So we are seeing this, shift in terms of IT taking on the mantle of driving adoption in a bigger way. If you ask me what the biggest opportunity in that space is trying to take the complexity away. I mean, we've seen that in terms of the latest stats, 90% of organizations are consuming more than one cloud. Now, that could be across the hybrid work environment or from an infrastructure perspective. But what happens is you have this complexity of managing multiple service providers in separate teams. So the biggest trend and opportunity from an adoption perspective is creating the orchestration layer to bring all of these together and stitch all of the various investments that organizations have made with the various providers on their services. So there's two ways in which we've seen that driving adoption. One is organizations are building that capability and capacity internally, and investment is happening from that perspective, or they're partnering with a number of organizations who specialize in building out that managed services layer. And what that essentially creates is it creates the guardrails and best practice approaches, but within enough flexibility to innovate within those frameworks still. And that in itself is driving a lot of internal innovation around how organizations should build out their products, their services, how they need to change the way that they service their end customer.
All right, fantastic. So you've mentioned a couple of very interesting things in terms of people taking maybe a lift and shift approach in terms of the adoption of cloud services. Becky, so you work in a bank, right? So for those of you who don't know, shadow IT basically means people within the organization who are consuming IT services without necessarily going through IT, right? And without pointing at anybody in the organization. Is that something that you see in the real world? What is the adoption journey like? What kind of approaches have you taken, and how are you seeing in the industry in terms of that then?
Right. Well, at DTB, definitely we are slowly moving some of our services to the cloud, and there is a strategy that's in place in line with the services and offerings that we want to give to our clients as well as our partners. And it's just in line with what is happening in the world and in the industry generally, that we are not just looking at revenue streams from the traditional client who is an account holder, but also the partnerships and different people that are involved in the whole ecosystem. And some are giving us services, others are, we are giving services too. So you find one of the things that from a technical point, it doesn't make sense for us to consume, for example, Safaricom endpoints, APIs from Safaricom that are available on the cloud, and have them talk to on-prem and then avail the service to a third party on the cloud. It's just so many hops. It just makes so much more sense to consume them on the cloud and expose them on the cloud. And it just removes the hops and additional inefficiencies or points of failure that would exist with the leg that goes through on-prem. So just thinking through that, you'll find that they are somewhat like parallel environments. So similar services are available on the cloud as well as on-prem. So internally, they are being consumed by our internal applications, and then externally, they are being consumed by partners. So in a way, we're just trying to leverage both the capabilities of on-prem and cloud.
Fantastic. Thank you very much. I can see time is not on our side, so I'd like to stop it there. I know it's an interesting topic. We can talk about it ad infinitum, but I'd like to take this opportunity, first of all, to thank the panelists so that we can go into the Q&A session. So MC, whoever is in the back, we can maybe take a couple of minutes for some questions. The question right here.
Hi, my name is Liz. I don't know whether I'm audible, right?
Yes.
Yeah. I work for a company called Incentro. We are a Google Premier partner, so cloud is definitely at the core of what we do. One of the challenges we've seen in the market is there is no clear buying process for cloud, especially in the enterprise environment. So most of the RFPs or RFQs we've seen out are more of RFIs. So by the time we get to the end of the process, it's more of now them understanding what they needed in the first place. So how is that being solved, and how can partners like us support you in your cloud adoption journey? What are some of the priorities that you look for also in choosing the cloud public provider to work with? I hope that's clear.
Yeah, excellent question. I believe, Becky, that's to you. You take too long and you don't know what you want in English.
I think we're in Africa, so we prefer to go the Me Too way. Safaricom is doing it, so we'll do it as well. So I think mostly it's reliability and credibility. So the expectation is obviously that there's some of those industry-specific needs around security and reliability and the like, because obviously we don't want any breaches, or you wouldn't want any downtime. So if that can be clearly articulated, that would go a long way in ensuring that you get the comfort over and above any other specific needs that are being sought by the client. So for financial industry, I think that would be critical, the ability to be reliable and the ability to secure. Another item would be the on-soil requirement, because obviously the regulations in some countries would expect that the data resides in the specific country. So that capability should also be considered so that they address any legal requirements or regulatory requirements. Yeah.
Fantastic.
I could add to that. So I believe the driver is digital transformation. A lot of organizations want to digitally transform, but not know exactly how. One thing that has worked in my conversations is have a closed room door. When you see the RFI, have a closed room conversation with the heads. And let there be architects in the room, because traditional networks and cloud networks are totally different. And in those RFIs, sometimes they can be a waste of time. But when you have that meeting with them, they would actually see that they probably did not understand the cloud journey, and they will actually bring down that RFI and refine it. Yeah. So I've seen closed room sessions with architects successful in those conversations.
Yeah.
Right. Yeah. Fantastic. I think we may have time for one more question. Anybody from this?
I think also I can just add to that and say that the cloud approach should not be waterfall. So if you can also consider like consultancy services, just as he's saying, where you're guiding the client, would go a long way to just add the comfort levels.
All right. Yeah. Fantastic.
Can I maybe just make a comment as well there, Andrew, while we're looking for the last question?
Yes.
Yeah, so I think one of the, and this is to all the organizations that are thinking about taking cloud as part of their strategy. Cloud is not an IT strategy anymore. If you don't have the buy-in from your CEO to your procurement, to your HR, to every single aspect of the organization needs to come along on that journey. It's not a journey that's led by IT anymore. I think that in itself will help in terms of how newer models can be derived for commercializing and consuming cloud, but also in terms of how adoption is driven across the organization and not necessarily an imperative for IT alone.
Fantastic. Thank you very much. I think time's up. Thank you very much, ladies and gentlemen, for giving us your attention. We appreciate it. I think it's a wonderful conversation to have. Can we have a round of applause for our panelists? Thank you very much. Stage, right? We can just walk.
All right. As you know, started in 1991, and it started as one of the early tech companies in this market. We are warranty center for Lenovo and IBM, and we do that in our office. At least that helps us to give our clients a real-time support and also fixes once their systems fail.
Basically, it touches every aspect of IT industry, both in the private and public sector.
We are fortunate enough as a Kenyan-based company to be sitting in the hub of technology, of economies in Eastern Africa.
I believe the future is there. The main thing is for the company to keep training people and updating technology development, and also helping and associating with all our local companies and foreign companies working here so that we are at par with other countries.
Right, welcome back, ladies and gentlemen, to the Africa Fintech Summit. Our next speaker is a man who has extensive professional experience in delivering technology-enabled business transformation solutions for large financial service providers, financial system regulators, and fintech startups across Africa. He has extensive knowledge, capital, and hands-on experience in emerging technologies like AI, blockchain, robotics, and IoT. In the interest and in the beauty of the hybrid event, we want to welcome and appreciate the Executive Director at Mtec Africa. This is none other than Tunji Obumuboni, who is receiving us all the way from Nigeria. Welcome, Tunji. Can you hear us?
Yes, thank you very much. I can hear you loud and clear. I hope you can hear me as well.
Yes, we can. Over to you, Tunji.
All right, thank you very much. What a pleasure it is to be here this morning, sharing this event with you all. I'm really excited to be speaking at this great event, following the conversation since yesterday and some of the discussions we've had today. Very happy to have been part of it and gleaning from some of the insight that's been shared so far. I don't think I have so much time, so I'll just dive right into it. Thank you for having me again. I just want to say a big thank you to the organizers of the Africa Fintech Summit. And I'm going to be speaking on a topic that I believe is very timely and relevant, leveraging the RegTechs and the SupTechs to sort of transform the way we regulate innovation, not just fintech as new entrant into the financial services ecosystem, but financial services innovation, whether it's an incumbent innovating or it's a startup that is innovating, that poses some form of challenge to the regulators, the supervisors. And also, if you take an innovator's perspective, it's really challenging to have to, play in this market that is heavily and rightly so well regulated. So we'll talk about that in a minute. So I'm going to be sharing some of the insights that I've been fortunate to glean working right across the region, with regulators very closely. So Mtec will bring regulatory technology and supervisory technology that can enable the much needed transformation within the financial services ecosystem, particularly when you take a regulatory perspective. And definitely, even with proud to joining Mtec, I had the privilege of consulting in my time in KPMG with a number of financial services providers right across the region, including Kenya, the country very close to my heart. So I'm very happy to be here. In terms of agenda, I just try to structure this very quickly along 4 parts. Just talk about, like you expect to learn from any event of this nature, talk about the key trends, what are we seeing when it comes to the regulatory landscape within Africa, taking an Africa perspective. What's the evolution like when it comes to the regulatory landscape? And it's not just an evolution, it's a continuously evolving landscape. What does that look like? And I think just being able to bring it home to the transformation that we need to see when it comes to regulation. And that's very important. When you think about the runway, very short runway that the fintechs typically have when you think about capital and capital backing them. It's never a patient capital. So you want to see them go to market, you want to see them scale as quickly as possible. Regulation is an enabler if that can be well positioned to support the renovation landscape. So that's something that we believe should be a very insightful topic to talk about. And just closing it up with just a few things that I think we should take home. I like this picture because it tells me much about the landscape within financial services when it comes to how disinteresting it used to be to talk about regulation. I mean, speaking for some time now, in a number of events of this nature. And I know whenever we talk about regulation, which is a necessary, seen almost like a necessary evil, is a boring part of the topic, right, or of the event. But it's become a lot more interesting, just as we've seen a lot more interest when it comes to refereeing, something that is very similar in that context in sport, in football. Refereeing has become much more interesting than it used to be, because when the referee does that sign these days, you really want to see what's going to change. Technology backing the referee, video-assisted referee. And, when you think about what's changing, the game has not changed, right? Football is still football. But you see a lot of changes when it comes to, very smart strikers that are able to beat the offside trap. Beat the offside trap, not only their opponent, but even the referees. The referees find it very difficult to be able to say who is off, is this player offside or not? Very difficult to make a call on what's the right goal or not. So you then begin to see that evolution, and that evolution bringing with it some need for technology. So you see that in sports, you see that in a lot of other sectors and industry when it comes to applying technology, and financial services is definitely not an exception. And we're seeing technology make a big impact in our sector, in our industry, financial services, right across banking, capital market, insurance. I mean, just name it. There's a lot of impact that we're seeing. And from an innovator's perspective, this is the picture, right? Very difficult to navigate. You want to be a speedboat, you want to be agile, and that's what's needed, because the customer needs are changing every day. You can't deploy the supertanker approach where it takes you so long to get from point A to point B. So the speedboat, yes, but again, this speedboat is riding on a murky water, the water of regulation. How do you make that work when a speedboat rides on? And it's not because the regulators want to be slow. It's not because they want to be a murky water for the speedboat. It's just because, there are challenges when it comes to, and I think you can encapsulate all of the things you see on this slide when it comes to regulatory challenges, regulating this space. You can encapsulate it in that common saying that technology innovation will always outpace regulation, because regulation has to regulate something that exists, and technology keeps creating new animals every day, new business models, new ways of doing business, new channels. New process automation regime and whatnot. And regulation would then have to figure out, wait a minute, I'm chasing this yesterday, I have this new animal today, how do I regulate that? So a lot of need for knowledge, technological know-how, understanding, we are in the age of data, and how that is providing a lot of value for businesses when it comes to, being able to predict, prescribe, leveraging on machine learning and artificial intelligence models. But how do you understand the black box? Because yes, input, output, but in between that, you have a black box. And at times you could really see some algorithmic bias when it comes to the way some of these artificial intelligence and machine learning models process. So, there's just so much when it comes to what to grapple and battle with as a regulator, right? The data is massive. But, just to talk about some of those key trends, and I won't spend too much time, it's not my key message, but one thing we're seeing, which is definitely a good thing for us when it comes to the innovation landscape, is that there's a lot more positivity when it comes to the outlook of fintechs, innovation. Gone are the days where they were seen as evil, necessary evil, but now definitely being seen as a positive effect bringer, some entities that can bring positivity. When you look right across the Africa region, you see a story of huge financial exclusion, right? Financial inclusion is still a very relevant topic. even though we've made strides, very big strides in a number of countries. The M-Pesa story is very known and well told about Kenya. And, you know, a lot of markets in Africa is also, you know, leveraging the power of mobile money and how that is sort of closing the gap. But financial inclusion is still a big thing. And we're seeing that, you know, and regulators right across the globe, you know, CCAF and World Bank gives us a good, you know, a reference point when it comes to this survey. This was just done post-COVID. Maybe we're saying COVID, but definitely in terms of the impact COVID has had in this sector and the acceleration of what was already a thing, digitization of financial services. We're seeing a lot more regulators say, wait a minute, this is not a bad thing. It's actually pushing financial services innovation. Fintech is definitely creating a lot of opportunities for financial inclusion, market development. Even when it comes to financial stability, you can link that with healthy competition. So if we can actually create a competitive market, enabling these innovators to thrive, maybe we can even have a more stable you know, environment when it comes to financial inclusion and much more. So we're seeing a lot of that. And I think some of the things we're also seeing, just to talk about a few, there are quite a number of observable trends, you know, but we're seeing a lot of regulators innovate. I have this saying that I tend to reference every time that if you have to regulate innovation, you know, you then have to be prepared to innovate regulation. There's no two ways about it. The way regulators regulated years back, you know, it can't be the same way. It can't be business as usual. The financial services landscape is changing. You know, a lot more. Gone are the days when it took 3 years, 4 years to incubate a product. You know, thinking through ideation and all of that. Product gets created in a matter of months now. And the agility of product creation, you know, is also pushing the regulators to be a lot more agile, a lot more data-centric, right, about the way they regulate. So we're seeing innovative approaches to regulation. We're seeing regulators right across the region. We're seeing a lot of blue patches there. We're observing a lot of trends across a number of countries, including Kenya, Nigeria. I mean, just name it, South Africa, countries that are beginning to put in place things like regulatory sandboxes, right? Innovation offices, regulatory innovation offices, regulatory reg tech labs, you know, and so on and so forth. We're also seeing bespoke regulatory frameworks, right? I think one of the things that we can very quickly understand when it comes to the challenges is the gap, the regulatory gap that we see. The regulatory framework that govern financial services are only defined to the extent of financial services. But the picture of financial services has changed. You're seeing a number of new and innovative business models, crowdfunding, right? Gone are the days where only a bank balance sheet can fund lending. You are seeing crowdfund lending. And how does regulators regulate that? Something that was a regulatory gap for a number of jurisdictions, but now being closed. You are seeing a lot of markets, including Nigeria, including Kenya, including you know, countries like South Africa, Egypt, creating fit-for-purpose regulatory frameworks to govern things like P2P lending, ECFs, equity crowdfunding, right? We are seeing open banking frameworks, knowing that that can be a big enabler for innovation ecosystem. Regulators leading that stride. Central Bank of Nigeria recently just published the guidelines around open banking in Nigeria, something that should hopefully sort of transform the ecosystem in terms of openness, enabling customers to be the rightful owner of their data, to authorize the sharing of their data across market participants so that they can get the needed value out of that. So you're seeing a lot of also cross-sectoral frameworks, cybersecurity, open banking, like I said, and this is in recognition that, look, technology is proliferating. No longer are we going to have silos, but you know, we need to have a cross-sectorial framework for things like cybersecurity. So you've seen a lot more of these trends come true. So in terms of why I strongly believe that, you know, there's a need for change, and hopefully the RegTechs and the SupTechs provide a huge opportunity for that change. When you just take a look at the picture, I won't talk about all of the points here. There are points that I think very easily understandable. But one of the things that I think is very prevalent when it comes to, just looking at the traditional banking and the fintech, or you could even say traditional finance, not just banking, and the fintech evolution, the fintech emergence of fintech is no longer about chasing top line and bottom line growth. You are seeing a lot of emerging fintechs. Some of them are becoming unicorns very quickly, but for them it's about go-to-market. It's about scaling. And how do you enable that to happen as a regulator? Particularly when you have gaps when it comes to how to regulate this space. So you then begin to talk about things like, then begin to talk about the licensing regime, which I'll get to in the next slide. But you're seeing that what is being regulated is actually not a single-sided solution. It's usually platform thinking that is being adopted by most of these fintechs, just staying in the middle and facilitating two sides of the market to come together. How do you regulate that? How do you regulate an heavily mobile-dependent business, right? New risk, cybersecurity is a big thing, and how do you also respond, like I said before, to a structure that is a lot flatter, a lot leaner, and therefore puts a lot of pressure when it comes to the requirement for agility on the regulator side. So that's a big thing. And I think, when you begin to look at some of the, weaknesses that you see in just by the nature of startups, you don't have the well-structured GRC framework, governance, risk and controls. And rightly so at times, because some of those processes that are legacy around GRC, you're seeing a lot of technology and innovation around, making them a lot more sleeker, a lot more streamlined. So you have lean ops, no ops. But of course, what that means is that moving from unknowns, from a relatively known space of risk to a lot more unknown space, right? Emerging risk, and a lot of these risks are very difficult to predict, very difficult to curtail. So how do you do that? So you begin to see a lot of, migration, so to speak, from the traditional licensing route to market to more of sandboxing. And what does that mean? What does it mean to sandbox? How do you enable that to happen? How do you allow people to go to market without knowing the risk and the enormity of the risks that you are exposing the consumers to, that you are exposing the financial services sector as a whole to in terms of financial services stability? So data is very key when you begin to talk about those things. And that's where RegTech and SupTech platform, regulatory technology platforms, supervisory technology platform becomes a big thing, a big opportunity for us, to be able to deal with the unknowns, to be able to learn progressively with the market participant from a regulator's perspective, to be able to co-create, migrating from that, stick approach of the regulators to a more collaborative approach. And we're seeing that even the whole concept of, sandboxing, for example, or, even when you take a broader regulatory perspective beyond sandboxing fintechs, even regulating innovative financial services provider, whether that's a bank or an insurance or whatever, there's a lot more opportunities when it comes to digitization, moving from paper to platforms. And how does that look? I just take an example of regulatory sandboxes, for example, as a reference point. So you sort of seen, an evolution there where a number of regulators right across the globe are moving now from paper-based sort of sandboxing to digital sandboxing. And this is one of the areas where we are very happy to be bringing innovation to the market, enabling regulators to sort of digitize the onboarding of fintechs, right? Digitize the acquisition of data, the processing of data, and almost in a real-time basis, being able to visualize different kind of data points, right? Metrics, go to the market performance metrics, security metrics, system metrics, that enable you as a regulator to, put in fit for purpose regulatory frameworks haven't learned how these solutions perform in the market. And I think that is the more, more futuristic way, to regulate this space, leveraging these technologies, leveraging the RegTechs that can streamline regulatory reporting processes, that can streamline compliance processes, that can streamline even the process of enabling that go-to-market for the fintech, streamline even when the process of revoking access when a fintech is not complying, or when definitely from a regulator's perspective, you want to have that kind of capability, particularly when you are sandboxing, right? You have frameworks, you have guidelines. How do you ensure compliance? How do you ensure that you can prescribe, to the participant? And even from a co-creation perspective, how do you enable early engagement between fintechs, between financial services players and the regulators, right? So this is just a picture of how our platform can enable that. Two sides of the platform, RegTech platforms largely used by the market players, also by the regulators, but supervisory technology platforms leveraged by regulators, whether you are a capital market regulator, banking regulator, the central banks, you can co-create, you can commingle with the market players. You can enable the go-to-market. You can enable seamless journeys for the regulators, and hopefully create that much needed financial inclusion enablement, create that much needed growth when it comes to fintech enabling other sectors of the market. And I think that's a huge opportunity when you think about Africa. I just want to bring it home just to talk about some of the key points that I think, as you think about what this looks like and how might we get there. One, I think we have to have an approach that does no harm to innovation. And I think that's very important. It's a very important takeaway. I'm sure a lot of innovators in the room, a number of entrepreneurs in the room would really agree with me that this is an important point, because when it comes to putting the weight of regulation, that regulation can be weighty at times. And putting that weight on a startup at times is not always the best way to go. But how do you have a balanced approach to regulation in a way that you can manage the risk, but also get the returns? And there's certainly return for the entire ecosystem when it comes to competitiveness, when it comes to stability, as I touched on earlier. But RegTechs and SupTechs, as I alluded to, are going to be very key to creating those fit-for-purpose frameworks. But in terms of the how, just wanted to leave these 6 points, just something to think about. I think it's very important for the fintech revolution to be embraced. And I don't think I'm saying anything new. The very first slide I showed you on the trend, tells you what the picture is looking like. A lot more adoption, a lot more openness from the regulators to this thing that has become a revolution, fintech. So, but I think it's very important for us to understand what that landscape looks like. So understanding the landscape, not only regulators understanding that landscape, but even the banks, the incumbent, because it's the name of the game is collaboration. Who can you collaborate with? Who can you engage? And understanding how you can enable their journeys, how they can also enable your journey. Understanding that landscape is very key. And being able to provide the regulatory clarity that is needed, enabled by tech platforms like RegTech and SupTech platform that can bring compliance processes, bring down the cost of compliance, bring down the time to comply, bring down the whole pain around compliance, which can be very painful today. And having a holistic regulatory approach enabled that by the data that you get from such platforms, because those platforms do give you a lot of data. Of course, capacity building is something that we know about how important that is. So my closing thoughts, I know I'm running out of time. My closing thoughts.
Yes. Tunji, sorry, Tunji. Hello, Tunji. All right. Yes, you can give us just the closing remark in the next 1 minute or so. Yes, in the interest of time, we'll appreciate that.
Right. So I'm just closing with this slide, and I think, without spending too much time on it, I think it's very important that we make we take the next steps. Right, we talk about overhauling regulatory frameworks, enabling that with RegTech and fintech platform, innovating front to back, and how that's important for all the ecosystem players. Collaboration, I touched on it. But I think it's important to take what is the next step. We don't need to wait until that, we can make that giant stride forward. I'm of the school of thought that, done is better than perfect in many situations, right? So can we take that next step when it comes to leveraging some of this technology? A number of them are cloud-based. A number of them are, SaaS platforms. From a fintech perspective, from a bank perspective, from a regulator perspective, you really don't have to have a huge outlay of cash. There are SaaS platforms out there that can enable some of these journeys. And I do hope that, you've been able to pick one or two things that would help your regulatory journeys. And also from a regulator's perspective, help regulating and supervising the market a lot better with technology. Thank you so much. Happy to take any questions, if any.
All right. Let's appreciate Tunji. Fantastic. Thank you so much, Tunji. We totally appreciate the presentation. It was great having you here on this particular platform. We look forward to engaging with you even as we proceed further. Okay, so thank you so much. I know because of the interest of time, we'll collect the questions and then we can share it with you and you can give us the feedback on the same. I hope that sits well with you. All right, as they say in West Africa, no wahala. Thank you so much, Tunji.
40,000 feet, and the one that makes it all possible when every moment counts. With VMware Cloud, all your apps benefit from a cloud that gives you flexibility, choice, and speed, wherever your business takes you. VMware, welcome change.
Welcome back, ladies and gentlemen, to the Africa Fintech Summit. And our next discussion is going to be around monetize your data and scale the AI ladder. To guide us through this particular discussion is the data analytics and AI leader, East and West Africa, IBM via TBM. This is none other than Ben Bottleberg. Help me appreciate him with a round of applause as he takes over the stage.
Good afternoon, ladies and gentlemen. Thank you, everyone, for making the time to come here today. Thank you very much to the DX5 team and all the sponsors for actually bringing us together. I don't know about you guys, but I've really missed actually seeing people face to face. I've been going crazy with all these WebExes, only seeing computer screens. So being able to see you guys, to hear the experts talking, it's really refreshing. I promise, I'm not just in it for the free food. And on that note, I know that I'm the barrier between you guys and lunch, so I'll try and be as quick as possible. Like we've said, my name is Ben Omondi Bottleberg, and I manage the data, analytics, and artificial intelligence for IBM. And I'm actually here to just tell you about how you can monetize your data. That's one of the themes we've heard a lot about today, monetize your data. And of course, how can you scale the AI ladder and be an AI company? Just on that note here, it's written Ben Bottleberg. I introduced myself as Ben Omondi Bottleberg. It's actually quite interesting. People speak to me differently depending on the name. When they hear Ben Bottleberg, it's, hello, sir. When they hear Ben Omondi, kumbe pueni moja wetu. So feel free to do either. But on that note, so IBM, we've actually been in Kenya since 1981. And most people, when I speak to them, they just know IBM as that hardware company, those guys for servers. But we've actually constantly been reinventing ourselves, and now we're a hybrid cloud, data, and AI company. So just breaking that down, some of the themes we've heard, hybrid cloud. That means we maximize use of your existing systems, whatever on-premise infrastructure you have and you've invested in, and we help you scale through the cloud. The data, as we know, past 20 years, data has been the natural resource which everyone is utilizing. And of course, the AI. I think people are tired of working for the systems. We want the systems to work for us. So that's where the AI comes in. And what I have here is specifically on our software side. Like I said, hybrid software. It can run on your cloud, it can run on-premise. Starting at the top, we have a branch that deals with automation and integration. On the right, we have the secure. This is all about security. There's been a lot of talk about the CISOs, a lot of talk about cybersecurity. So that's the branch that deals with that. On my end, of course, it's the far left, predict. How can you predict? You have to have data. You analyze that data, you get your results. And then right at the bottom is modernizing. We're helping people modernize their infrastructure. And yesterday it was mentioned by one of the presenters around Kubernetes. How are we helping companies through containerization? We're past the days of rip and replacing things. And as a result of us buying Red Hat for OpenShift, we're now the leaders in the industry when it comes to the containerization. As you can see, at the heart of everything is the AI for business. So on that note, I'll be selfish and just talk about my data part. The same way human behavior has adapted and evolved over the years is the same way technology has also evolved. Starting with the Moore's Law era, it was all about how much data can we produce. That's when there was the explosion of data. The next era was more about networking and connectivity. I think the best way to describe this is, you know, you can be speaking to your friends on Messenger, WhatsApp, Instagram, whatever, saying, hey, boss has been riding me hard. I need to go on holiday. I need to go to Mombasa. Next time you log into Facebook, you're just scrolling through your timeline. All of a sudden, get the deal of your life. Fantastic trip to Mombasa. Best deals around. That's that connectivity, trying to get that information. And that's led to where we are now in the knowledge era. The knowledge era, there's been all this data that's been produced, but we're only utilizing this much data. That's what leaves the knowledge gap. An analogy I like to use here, it's like being stranded in the middle of the ocean. You're surrounded by all this water, but there's nothing you can drink. That's where we are with data. You have all this data, structured, unstructured, whatever, but are you utilizing it all? How well can you actually maximize on it? And depending on how the companies use this, depending on how you apply this in your business, it dictates the value you can get out. So of course, the more you utilize your data, the more you become AI-driven, the more value you get out. So starting on the left, cost reduction. A bank will have a look at 10 of their branches, which is the least profitable. Okay, we close that branch down. Fantastic. The data has helped you, you've reduced cost. Around 65% of companies are at that point where you're looking at business intelligence and data warehousing. Some people have self-service analytics. So the difference is there's those people who they get the data and they interrogate it. There's the other people who, in the morning when you open your screen, you see the red arrows pointing down, green arrows pointing up, then you decide how to act from that. But then, really where you get that explosion is through the AI, enabling business transformation. We've heard about a taxi company who can actually help their employees get savings. You've heard about M-Pesa, which has grown from simply M-Pesa in Kenya to M-Pesa Africa. How many people have copied their fantastic business model? So really, guys, that's the differentiator which we need to have, and that's why we're all here. You can see the statistics on the far right, which I won't repeat, because we see the value that companies are starting to find here. On that note, remember that analogy about the ocean. Companies have 73% of the data is unused. What's it doing? You're spending your money on these expensive storage, but you're not actually mining that data. You're not getting the insights you need out of it. So that's what we want to change, because the companies that are data-driven and AI-powered are the ones who are most successful. I won't read through all these statistics, but I think one of the most significant is on the top right. Companies that are data-driven are 178% more likely to outperform their competitors. So think about that. COVID, how many businesses have suffered? How many businesses have had to shut down? If you just had that edge, they could still be in it. And another one right in the middle, they're 112% more likely to find unmet needs. End of the day, the reason we're here is because of our customers. So let's help tap into what their requirements are. And I'm not sure if any of you have seen my bio, but part of what I put in there, and we can even see with the change, it's not just CIO Africa, it's now DX5, digital transformation. Because IT isn't that sinkhole where you just give them funds, give IT the money, they buy those servers, they'll be quiet till next year. No. People are starting to see that IT is an enabler. IT provides business value. So just right at the top there, customer care. These days, because of our phones, because of all the innovation, we have very learned end customers who aren't loyal. You don't give me the services I want, I'll get them from someone else. So if I have to call a call center, whether you're my telco, whether you're my bank, and then I'm waiting to be 10th in line, 9th in line, 8th in line for 10 minutes, finally I get connected to someone. Once I've explained to them my problem for 5 minutes, sorry, let me connect you to my expert. I'm tired, I'm not gonna waste my time with that. So why not have a virtual assistant, a chatbot, which is on steroids. The steroids are the artificial intelligence, which can actually address all these things, help improve your customer satisfaction. We've had customers having a 15% improvement in Net Promoter Score. On top of that, also think of yourself. If you're working at that call center, you get 100 phone calls in the day, and 40 of them are people asking you, where's the closest ATM? You really think you can add more value. You want to be dealing with the people who are asking you, I'm getting married in September, I want to have a family for my house by October, what will the mortgage look like? Now, I feel like I'm really affecting people's lives. I'm not just a Google map saying there's the closest ATM. So I think that's really the value which you can start to see with some of these tools. Some of the team here yesterday, Kevin, Muni, the two Carolines, even the people who presented today, have spoken about the importance of regulation. What's the cost of compliance? Yeah, it might be expensive to get the tools, but the punishment, the fine, that's what will sink you. So really having the right tools, mitigate that risk, get the right fraud management technology in place, the right operational risk technology in place. And another one, democratizing data. We have all this data, but you still have companies, we're all guilty, running around saying, have you updated the new Excel table? Which version are you working with? Okay, give boss the report. Let's have these in the system. Let's have these automated. We don't want to work for the systems, do we? Let the systems work for us. So that being said, like I said on the data side, there's no AI without IA. There's no artificial intelligence without the required information architecture. Garbage in, garbage out. How well are the structures? And on that note, that's one of the main challenges people have. Again, in the morning, someone was saying, I don't have the statistics to back it, so here are some statistics, where around 58% of customers complain that the data quality is the main problem they face. And only around 39% of businesses actually see their data as an asset. Think about it. How well do you know your customer? How well do you know their spending patterns? This person who's been complaining about Mombasa, how soon are you going to reach out to them before Bonfire, before all these other travel agencies reach out? So we really need to understand the importance of that data. And like I said at the start, scaling the AI ladder, what does that mean? It's how a company can take deliberate steps to be AI-driven. I'll start at the bottom, the collect. How are you getting the data from all these different sources? Fantastic. Once you have this data, how well is it organized? Is it Ben Omondi Bottleberg, Ben Omondi? When you look at that in the system, are those 3 customers, or is that 1 customer? How well are you organized there? How well are you analyzing this data now? And of course, once you trust the analysis you get out, it leads to infusing the AI, meaning you're making the system work for you. To put this in a bit more of a practical context, let's look at a bank. So a bank decides they want to serve their customers better. They collect their data. They have all this data from people, well and good. Now let's analyze that data. You decide I want to analyze the demographic, people between 20 and 30. What do they want in an account? Okay, as you analyze this data, you see that, okay, most of these people in the demographic, they either want a credit or an overdraft system, where even though you have 0 shillings in your account, an M-Shwari practically, you have 0 shillings in your account, but you can still have access to money. That's one, some of them want that, others want a car loan. Okay, fine. Let's analyze it. We need to understand why. Turns out, majority of the people between 20 and 25 are the ones who want this credit system. Why is that? Because they're in university. Or maybe they're very early professionals and they don't have very regular income. Sometimes they get their money on the 28th, sometimes they get it on the 5th. Either way, the landlord is knocking on the door on the 1st, that you need to pay that rent. So, okay, now you understand why 20 to 25 need it. Someone in that demographic tries to open an account, show them that offer. Now you see, they understand. While those between 26 and 30, they tend to be the ones who can now afford getting a car loan because they have more regular income. So fantastic. Ben is 29. I apply to this bank. They will already know, offer him a car loan. I can't tell you how many times I've got a message that's asking me, Ben, start saving for university. Or, Ben, are you ready for your retirement plan? Those are complete ends of the spectrum. Who are you talking to? Who is this Ben? So, and then now once you start trusting these systems, as soon as Ben, who's 23, applies to your bank, you can already hit him with a credit. They understand me. Ben, 28, car loan. They understand me. So that's when we start infusing. We start actually trusting the system. But of course, we all watch movies. We've heard of Terminator. We've heard of Matrix, how AI is going to take over. So of course, there is some crisis in trust around AI. Around 68% of people say if they're applying for a bank loan, they'd rather a human tell them that they can't get it than a system to generate it. On the other hand, 60% of companies find that regulation is the barrier. So again, regulation, we keep hearing that term. So how can we actually trust AI? And here are some of the principles we use. Number one, explainability. If that system tells you why you can't get this loan, why is it? The system has to be able to explain it. Fairness. Over time, as these systems are in place, they start to skew, they start to get a bias. So you constantly have to realign that ship. Robustness as well. How safe is it? How strong is this foundation which we're relying on all this AI? Transparency. If someone comes to audit you, how sure are you that it hasn't been tampered with? And finally, privacy. It's funny that these go right after each other. Transparency, then privacy. But the transparency is key, but as much as I want to be able to audit you, I want to make sure no one knows who is Ben. I'm just a serial number in the system. But when I speak to my relationship manager, you know exactly who Ben is. So overall, yesterday when I did this, I took around 25 minutes. Now I think I'm within the time. But thank you everyone for listening to me. Ultimately, I'm here to discuss with you how we can maximize your data. How can you be an AI company? They say that a rising tide raises all ships. We're the ships here, guys. Whether it's us as individuals who are passionate about technology, whether it's as our different companies, we are the ships. And the tide is technology, guys. Let's make this work. So thank you, everyone, for your time. Feel free to take my number, take my email, reach out to me. I'm more than happy to discuss this with you. Now I think it's lunchtime. Yeah. Thank you.
All right, help me appreciate Ben one more time. Thank you for that. And yes, he's given us his contacts, his number. We can be able to get in touch with him. Also, thank you so much for that, Ben. Ben is single, yes, but you can be able to get in touch with him. Ladies and gentlemen, we have come to the time where we want to have our lunch. Let's all kindly be upstanding. This is, according to my watch, it's 1:25. We want to take exactly 35 minutes because we want to spend more time in the afternoon session, all right? So kindly, if we can all rise, ladies and gentlemen, stretch a bit, all right? Okay, all right, just high five persons standing next to you and tell them lunch is on Ben, all right? Lunch is on Ben. See you.
Everyone uses M-Pesa daily. Even me, I no longer carry any credit cards or cash. I use M-Pesa. More and more of these companies will start to look at crypto as a way to bring down the transfer cost. The statistics in the space are for sure pointing in the right direction. It's a great market to invest in. My name is Mandeep. I am the Business Development Manager in the Middle East and Africa region for Aquant. Aquant is a US company that are focused very much on the identity management space. So they have a complete unified API platform that covers identity verification, it covers fraud prevention, AML screening and transaction monitoring, all in a single unified API. Every use case, every vertical that we have tens of thousands of customers who are all onboarding and verifying customers' identities using our technology, because we're now in a digital world. Today you can open a bank account digitally. You can buy products digitally. So every one of those customers that use our services, they want to ensure that the identity is truly that person and not a stolen identity. So with our technology, they can verify that Mandeep is really Mandeep and not someone else through various tests that we do through our platform. I attended recent events, fintech events, and I'm seeing a lot of companies that are setting up in the crypto space. So that's one that's growing. Although over the last few weeks, it's all taken a bashing. Seeing a lot in the BNPL space and lending, and payments. Payments has been ongoing for quite a while, but that's ever increasing. And I'm seeing also the interest in trying to reduce the cost of remittances, etc. as well. So that's also an area, because remittances continue to be on average 8 to 10% from US, Europe into Africa. So I know many companies are looking at that. And increasingly, aside from those areas in fintech, there are areas that are growing in verification in areas like hospitality, for example, and rentals. So anyone hiring an Airbnb, for example, the hosts want to know who the customer is or are that are going to take up those. So we're seeing growth in those areas. But yeah, the fintech landscape in Africa, certainly BNPL is and neobanking. And good examples recently. Customers are moving towards and switching to neobanking, and some of these neobanks are now keen to expand their services and offer the ability for bill payments and mobile commerce within the same super apps. So there's growth in those areas. I see opportunities in getting the financially underserved into the banked space. So having traveled across Africa recently, there's still a massive opportunity in the space. And even at today's event, clearly the numbers show that there is a massive scope to get the unbanked into the bank space, and that will improve the space ongoing. Even me as an individual, I see a mass. The opportunities are there. I mean, everyone is, every penny we spend today, most of it we're doing digitally. Yes, most of Africa is still cash, but we're moving as we make it easier for customers to become financially inclusive. They're moving to the ability to be able to make payments online. So from an investment perspective, I see the opportunity, and I see why investors are pumping money, because as soon as everyone is banked, then and then clearly looking at the M-Pesa numbers, everyone uses M-Pesa daily. Even me, I no longer carry any credit cards or cash. I use M-Pesa. So looking at those numbers is why investors are constantly looking at investing in any companies that are in the fintech space, because it's just going to mushroom, as we get customers onto the financial space. I'm seeing a huge interest in, certainly in neobanking. Not only entrepreneurs wanting to get into that space, but also companies who are putting together full-fledged systems that can provide all of those services, from lending, having current accounts, onboarding, virtual cards. There are some companies, some massive companies that are beginning to now get people onboarded and offer virtual cards that they can use to use for payments on m-commerce platforms. So even M-Pesa, they've moved from mobile money to now supporting virtual cards, so people can shop abroad and use M-Pesa to make those payments. So and BNPL has grown considerably. I mean, I've met some companies recently in the Middle East who are actually offering loans interest-free. It's the merchants that are paying for their customers to take their goods. So that's an area that's mushrooming, a lot. And as I say, neobanks is the new flavor. The payment space and the remittance space has been around, but I believe that more and more of these companies will start to look at crypto as a way to bring down the transfer costs. Only today I saw a posting on LinkedIn where we now have the euro coin backed by European Union. And I don't know if that's a true fact or not, but if it is, and we can bring down the cost of remittance, that's going to be amazing. Many years ago, way back in 2017, I was actually given the role to lead a company to do remittances from the US to the Caribbean. That was my entry from the mobile space into the fintech space. So ever since then, I still see an opportunity in remittances, but clearly there's opportunities in lending, neobanking, payments, virtual cards. That's all beginning to grow. And when I told my wife, did you know a virtual card on M-Pesa, she was surprised, but happy when she knew, because she buys things abroad often. So now she can do that easily. Yes, there's a lot of money coming in, but I believe today we're experiencing what we call a funding winter. People are scaling back. You can see companies are now even cutting employees. Once again, recent piece of news I see in the Middle East, some of these crypto companies, Beta Oasis, are now shedding employees because they're seeing cutbacks in the crypto space. So having been an investor, I would highly recommend every investor to do thorough diligence, look at all the statistics. The statistics in the space are for sure pointing in the right direction. It's a great market to invest in, but invest in the right people, invest in the right companies with the right business models. That's what I would do. And make sure that you have the right contractual or investment agreements in place to ensure that your investments are safe and protected. Now, I believe in responsible lending. I don't want to get into the situation where way back many years ago in the US, payday loans were done, but it was a very dirty business. It needs to be responsible. And any companies that I would highly recommend investing in would be those where it's responsible lending and the loans are being used by the merchants to buy fuel for the day, to take their customers where they need to go, or buy product stock for the day or the weekend, and then pay back those loans. And in essence, helping the merchants grow with loans that are required for that period that they need them for. So I believe there's still a fair amount of opportunity there. I would love to see crypto, but yes, currently the situation is a little bit down in the crypto space. But ultimately, I believe that, you know, as governments are beginning to look at national coins, I believe that it will increase the ability for all the populations of the African nations to be in the payment space, because they don't have to use physical cash. They can have digital coins.
Can you guess where I am? I am super excited because we are launching DX100, formerly known as CIO 100, and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is, for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in and we'll see you in November.
All right, ladies and gentlemen, up next is our fireside chat. And the topic of discussion for this is, what is the fintech opportunity for banks? Our first facilitator, she is a transformation and influence leader and professional in fintech in the region with over 10 years of experience. She is the go-getter leader and subject matter expert for positive transformation of business and the people with digital revolution at the core. Ladies and gentlemen, help me appreciate the country manager at Cellulant. This is none other than Faith Nkatha. And our next facilitator, he is a man with 25 years of experience in tech industry. He is the founder and executive director of Kenya Founded Demo Africa. He is currently the chief content director and chairman at DX5. Ladies and gentlemen, help me appreciate, you know him, you see him, you love him, the legendary Harry.
This guy called Ian is just out of this world, eh? Yesterday, I had to respond to about 500 text messages of people wishing me a happy birthday because of him. Normally, my birthday is chini ya maji, as they would say. You know, I just celebrate it quietly. But yesterday, I had 500 messages on WhatsApp. I think about 200 messages on text. I have like 1,000 messages on Facebook. I think a couple of thousand messages on LinkedIn. Thanks, Ian. Okay, so we are going to have a quick discussion. So it's going to be, we'll do about 20 minutes with Faith. Then I'll open it up for you guys to also chime in. Arthur, just give me that piece of paper. Yeah, and the pen. Then I'll invite you to chime in, but be nice, okay? Be nice. Don't ask controversial questions that Faith will not be able to answer. But it's about opportunity, and from the beginning of this session, of this forum, what we've been trying to do is share trends, identify challenges, but most importantly, see where the opportunities are. Because I think, I always tell people, Africa has so many problems, and all those problems are actually opportunities. We just need to switch it. Yeah? Look at every problem that you see in the marketplace as an opportunity for you to create a solution for. Good? Awesome. Faith.
Yes.
How are you?
I'm very well, thank you.
Good to
Happy
have you.
birthday.
Oh, man.
Since I didn't manage to do that yesterday.
Thank you. Thank you. By the way, guys, I had a blast. I had a good birthday, so thank you. You guys, you gave me blessings, right? Yeah, so thank you for that. So Faith, just quickly, yeah? Who are you? Who's Faith? I'm sure a lot of these guys are wondering who you are.
Okay. That's a good question, a question that we ask in every interview. Tell me about yourself.
No, I didn't ask that question. No, I didn't do that.
That's a good question, and thank you for that. I think I'll start by saying Faith is a mother. I say that because, like I was sharing with you earlier, we easily pull that out of who we are, so I want to start there. I'm married to one husband, and I have three boys who keep me on my feet.
Stop. Married, okay.
Yeah, and I have three sons who keep me on my feet. They're all below 7. So when you see me on the side there, just give me a hug, assure me it's fine. But anyway, started off in banking. I keep saying I moved from the people who needed the app to those who make the app. And I'm glad I made that shift. Then, of course, shifted into tech. I worked for Oracle. And then, of course, I'm at Cellulant. I'm a therapist as well.
What?
Let me let that sink. Yeah, so it's interesting.
Therapist?
Yes. I studied psychology, behavioral psychology, corporate psychology. What happened is, and I say this because I think it's important, I got into leadership very young. And so I remember the first team I was handling was like 27 people. And did you hear? People, So I was seated there super confused about myself and about these 27 people all over Kenya. And so I was like, do I go to uni and do strategic management, which was so popular in my days? And I have no offense, there's no offense to strategic management. And I was like, what about I get into school and learn about myself and human beings, because our customers are human beings. The teams we manage are human beings, the boss who you need to manage is a human being. And one of the best decisions I've ever made. Yeah, awesome. So yes, I've studied therapy. Who Faith is as an individual, I'm aggressive in a good way, not aggressive as my tribes people are. I'm a serious go-getter. I love a good challenge. I tell every employer, the day you see me bored, no, I'm not challenged anymore. So I have to wake up to a good challenge. I am 38, super excited about turning 40. And why I say that is that I've had some very interesting conversations with people who are past 40. And so I'm looking forward to that. I think in essence, that's who I am. I also spend a lot of time mentoring. So if I'm not speaking in an event like this, you'll find me doing a lot of mentorship. I keep saying there are so many mistakes that I've avoided if I'd gotten people to tell me authentic stories, not just tell me their successes. So I like to do that for people who are younger and who are willing to listen anyway.
Awesome, awesome.
Yeah.
No, it's quite a package, yeah? Yeah?
Thank you.
So let's switch gears a bit.
Sure.
Cellulant. I think Cellulant is arguably one of the earliest fintechs, and also probably one of the most successful. I don't know. I don't know. I don't have numbers,
Yes.
so don't ask me numbers. Yeah?
Leading
You confirm.
payments
You confirm.
company in Africa.
Okay,
Yes.
okay. So the thing about companies is they grow, then they plateau, then they decay. Yeah? And to avoid that, you have to continuously innovate.
Yes.
Yeah? So what's happening at Cellulant right now?
I'll say we are continuously innovating, like you said. One of the things that the founder, Ken Njoroge, kept saying that I think is magic, for lack of a better word, is, follow the customer and their pain, you follow the money. And I think that's why as Cellulant, we really don't know the plateau. In fact, when you look at our history and our journey over the 18 years, I probably think we had the plateau just when Dusit happened, because we were hit really hard. And it wasn't really a plateau, but that was our biggest hit. But we've, over the years, just continued innovating because we're following the customer and their pain. And of course, the customer's needs are changing. And so that means we are always at the heart of what the customer is thinking, saying, feeling, and just making sure we are ahead of that. And so what's happening in Cellulant right now, top of mind partnerships. Partnerships are very big for us. And in the last few years, we've taken part in quite a number of partnerships. You've probably seen them. We've partnered with UBA, of course, just to advance our reach in Africa, to be able to offer better services to their 50,000 plus customers. We've partnered with NALA. We've partnered with Market Force as well. You've probably seen that as well, etc. And in essence, what we are saying is there are even other fintechs out there who maybe don't have the capability that we have. You don't need to suffer by yourself in a silo. Come, let's work together. Let's see how we build that together. I keep saying banks are our legacy business. We understand banks. Like you rightly said, we were first in the market. I remember when I first heard about Cellulant, I was a banker seated on this other side of the room, and they were telling us how they can help us connect the money in my mobile wallet with what is in the bank. And we're like, that's ridiculous. People. Like, are you guys even serious? Like, why would I need that? And to just see how we've been able to transform just digital banking and now getting into the enterprise business, now we are looking at how do we partner with these banks, because we already have them on board, to just better support their customers. And I'll tell you how that happened. During COVID, we had a lot of our customers, of course, come in and they're like, how do I go completely cashless? Because customers are not coming to my store. That's A. Then, of course, a lot of these merchants going completely cashless, then having to deal with recon issues. And then banks coming to us and saying, I'll give you an example. One bank came to us and they're like, I have a customer, they have a 200 million recon issue. Solve it for me, I can't. And we were like, you know what? Why do I need to go directly to this customer if I can go through the bank, and just offer, these services? I remember in my banking days, I'd go sell to Harry a current account, savings account, a fixed deposit account, a loan account, right? So why not, as a relationship manager, still sell these 4 things, but also sell, checkout solution, a pay-by-link solution, an in-store solution to these customers, so that the bank doesn't have to go through the full investment, but they can just get it through us. And those are the sort of partnerships and collaborations that I think will make up the future of banking, really. So those are some of the things that we're doing. And I'll tell you, we have up to 18 banks that are on the line for this specific solution. So it's needed. As a few banks have even been like, Faith, can we just lock it to just us till we are live, then you can add in all these other banks. Like we want it for ourselves. That's how big it is. And not just for Kenya, we're in 35 countries, so it's expanding to all the other countries. So those are some of the things we're doing. The other third thing I'll mention is that we are also scaling. like I earlier said, we're in 35 countries in Africa, and what we are seeing is, like a meeting I had this morning, and this customer has set up in Kenya, has been here for 9 months, now wants to go into East Africa and then Francophone and South, and they're like, can you do that journey with me? And there's no better feeling for me than to say yes. You know, that I'm not only taking care of you in Kenya, I will take care of you in all these other markets. So scaling for us is big, and just being able to have an Africa that's one, you know, that it doesn't matter where you are in Africa, you should be able to transact. And of course, globally. Yeah, so those are some of the things happening.
Yeah, I like the Africa focus, because it's also a vision that I really believe in, that, you know, we need to, you know, it needs to be Africa first, then the others.
Yes.
But you know, in different countries, you have different interests and different people with different interests. But I want to just take you back a bit.
Sure.
I am a founder of a company. Yes. I am an entrepreneur, and you know, in African businesses, the natural thing to do is to own a company. Run the company until you die, then the company dies with you. That's a natural thing to do.
Yeah.
Yeah. But Ken, your founder, actually sort of created a transition for himself and for the company, and brought in new management to take on the company. How did that pan out? In terms of, because you see, a lot of these companies have the founder DNA in them. And it's very, when you remove the founder, it's very easy for those companies to just...
Yeah.
So how did that transition?
That's a very good question. And I probably will start by saying, I think it's such a privilege to work for Cellulant. And I'm not just saying that because I work there. Like, there's just something amazing. Like, Harvard or somebody just needs to do a study about Cellulant, because it has so many things, so many good things going about it. I remember when Ken first called me, you know, to just have a chat way before I joined, and just listening to his vision, you know, about what he sees for Africa, what he sees for payments, what he sees for Cellulant. And I was like, I'd just love to be a part of that. And I think what his vision was not his. You know, it was fed through every single person. Anyone in Cellulant who will sit on this seat and you ask them that question will probably say the same thing. And if I was to use your words, that DNA is not Ken's DNA. I think it's a Cellulant DNA. It's in everybody. Like, you literally walk in, and you know, we joke in the organization, like, you'll come for an interview, and soon as you walk in, we can tell if you have that Cellulant DNA. Because,
really?
Yeah.
So do you walk like this? Or
No. It's just something that is just so, maybe it's in the four walls, so to speak. And it's something that he was able to work in. And as he walked out, like, nothing broke. Literally, because it's like fed into every fiber of the organization. And that's why you hear people quote, you know, like how he says, you know, follow the customer, you follow the money. You know, it's because it's not him, it's just in every person. And that's how the organization has been able to live past him. And I don't think, if he hadn't set it up that way, he wouldn't have had the courage to live genuinely. And I'm guessing even the people who've been there for very long, even though they all left, the organization would still have life and be able to move, which I think is a fantastic legacy for even other startups and SMEs to learn from. That from day one, that yes, you're running this organization, but to be able to let it live past you and just set up certain things in place to make sure that it can go beyond you, but which is fantastic to be part of as well. Yeah.
Good. So you're in 35 countries and probably the most successful. I'm saying probably because I don't have numbers.
Yeah.
Okay. Probably the most successful fintech in Africa. What's your secret sauce?
Wow. I'd say grit.
Grit?
Let me explain why. The other day I was in a meeting, And why I talk about that Cellulant being a DNA, the Cellulant DNA, I was in a meeting, and the customer makes a comment and goes like, that he can literally see the founder in us. You know, like we're just going at it. So there's a lot of grit, and there's a lot of customer obsession, for lack of a better word. You know, like we pick a customer and we don't stop till we make sure they're fully taken care of. I remember during COVID, you know, just customers coming in with all these aspects, you know, going like, I want to be able to just get a checkout solution ASAP because my customers want to buy online, and quickly partnering with someone to make sure we can roll that out, you know, because maybe you don't even have a website, you know. And so just quickly coming in and taking care of that. You know, so customer is at the center. And not only at the center for PR, but that we obsess about it, that we want to make sure we are hearing what the customer is saying. And we're going that extra mile for them. You know, one of our mission, do I call it our like core values, is customer delight, whatever it takes. You know, so it's not just customer delight, but whatever it takes, you know, to just make sure you're fully taken care of. And I think that's why we've been trusted by the leading airlines, the leading ride-hailing companies, the leading banks, you know, and the list goes on and on to leave us to handle the payments, and they can focus on their main business because they know we are taking care of that. So I'll say grit, the customer delight, whatever it takes, and I think most importantly is innovation. Way before I joined Cellulant, I'd always say I'd love to work for Cellulant because, you know, like we'd hear news from them fast. You know, like any new thing, no offense to anybody in the room who has an app, but the first time I heard about
Everybody
apps,
has an app, yeah.
I know, right? Anyone who set up an app, really. You know, the first time I heard about that was through Cellulant. You know, so it's also a team of very innovative people. And I think we also take care of our people. And I saw this, I wasn't working for Cellulant then, but during Dusit, you know, that the organization came to a standstill from the board to the leadership to just make sure these families affected and the staff affected were fully taken care of. And people drives the organization. And so I'd say those are the few things, according to Faith, that stand out.
Okay.
Yeah.
Okay. So a lot of startups, and I'm not saying all of them, but a lot of them, struggle a lot. You know, they struggle to navigate the regulatory environment.
Yes.
Yeah. Especially the startups within the fintech space.
Yes.
Because of the way, actually, I think fintech, education, and health, startups that are in those sectors struggle to navigate that regulatory environment because those sectors are heavily regulated.
Yes.
You are in 35 jurisdictions.
Yes.
Yeah? Which means you are dealing with 35 regulators. Is that correct?
Yes. Well,
how do you navigate that?
Yeah, that's a good question. Well, some countries, the regulators are a bit easier, or maybe you don't need a license to operate there. But in majority, of course, in Africa, you need that. And what you sort of see is the brand is the same, so to speak, in terms of the regulators behave a certain way, and it's almost similar. The expectations are the same. Maybe since we're in Kenya, I'll give an example of Kenya. I remember when I joined Cellulant, you know, and we were still in the process of getting our certification, our license. And what I've seen is that it matters how you found your business. Yeah, the foundation is so important, so that way, whatever blocks you're putting on top of that, you know, are sitting on a good foundation. Because what happens is that when the regulator comes in, you know, the checks that they're doing, you know, whether it's in terms of security, aspects of your financials, etc., you know, like you're not building on a wrong foundation, and they'll easily see through that. So maybe as to advise any startup, any fintech, just set up right. The founders of Cellulant took a lot of time to just make sure we were set up right, ground up, you know, and that helped when it came to going through the vetting process. Then the second thing is spend enough time building those relationships with the regulator. I think so many times as leadership, we call it, is it stakeholder management and aspects like that. I think it's so important to be able to build those relationships. So you're learning what's happening, you're learning what is needed, you're learning what changes have been made, what could work, what couldn't work. Then you can be able to set up the organization that way. And then thirdly, just invest. Invest in the right things that are needed, where the world is going, whether it's in terms of the ISO certifications, etc. And then also invest internally in your staff. So many times we have maybe just somebody in legal, just taking care of that. But I think where the world is going in just aspects of data protection and just all these things, there's a Bitcoin aspect that's becoming a big thing in cryptocurrency. So it helps to just have people in your team who are looking at that. Just managing the compliance aspect and the regulator. Because when I think about the fintech space, it's not just CBK, for example. There's the Communications Authority. There are so many other regulators. I think it just helps to have somebody, and not even somebody, you might need even a bigger team, And so for us, we have a very large team sitting in Nigeria. We have part of the team seated in Kenya. So, of course, and other aspects of the different parts of the continent, we still have people who are able, if we need like someone to read a contract in French, we have taken care of that. So just building that sort of infrastructure and structure really helps you as an organization when it comes to the regulator. But at this point, I'll also say that worry not, we have been licensed. So if you're a startup and want to just start powering payments, you can also partner with us. Yeah.
Okay, I'll charge you for that. I'll send you an invoice. That's marketing for you.
Yes. But you could be seated there as a fintech and you're like, oh man, if it took Cellulant X amount of years, how long will it take for me? I don't think it's taking too long anymore. The regulator is quite supportive. But until you get your license, you can look for us. Yeah.
Okay. So my last question before I open to the audience is, I know there's several investors in Cellulant, some big, some small, some who came earlier, others came later. And all these investors, I've dealt with investors, and all of them have, investors look for return on investment.
Yes.
And sometimes people have different ways to the return, or looking for different ways to the return. So how do you manage and balance investor interest and customer interest?
Yes. That's a very good question. Maybe I answer it in two ways. So firstly, outside Cellulant, I sit on 4 different boards, and I get to experience a bit of that. And I think it helps a lot to have confident leadership, and leadership that believes in the brand and what we are doing. Yeah, so you need to have an ExCo that is saying, yes, this is our go-to-market strategy, these are our numbers, we have faith in our teams to deliver X and Y project. So that way we are also able to direct and per se govern that sort of narrative or conversation. And so I've seen that in just some of the organizations I sit on the board on the side. And then I'll come into Cellulant. We've been very lucky to have very on-the-ground investors, so to speak. On the ground in that they're not so far removed from what's happening in Africa or in Kenya, so to speak. So they're very understanding in that sense. That does not mean they don't want the bottom line to make sense, but what they're looking for in the bottom line is very realistic and coming from a place of understanding. So you'll sit in the board meetings and you can see that, even in the sort of questions they're asking. They're not asking questions, that are too out of the box, like maybe talking about 100x growth, and realistically with proper ambition, maybe the best you can do is 10x. So we've been very lucky to get those sort of investors. And they've put in, I think we're at $61 million in terms of the invested funds. So they've put in quite a bit of money. But these are the same investors who come back and they're like, these guys have done well, let's give them bonus, and even in difficult times through COVID, that they're able to come back and ask, how can we support you get to this number? So I've seen a good experience with Cellulant, but what I know, even as we go for further investment, is that I've seen how we set up our decks, that we're able to put down, this is who we are, this is what we stand for, this is how we want to be seen in Africa, and so when that is clear from this end, then the investor also knows what they're getting into. And that has worked all through Series A to C, and I think will work beyond.
Okay.
Yeah,
Okay.
but I think we're in a good place. We've been lucky with the sort of investors that we have.
Okay, some questions, please, quickly. Just move to the microphone on either side. You can go to.
Hello, good morning.
Morning.
How are you?
Very well, thank
I wish
you.
it would have been like my session yesterday. We talked about embedded finance and banking as a service. What you're doing is something very amazing. You're actually changing the whole business model where the banks were in the front end and the suppliers, the service provider were in the back end. Now you're flipping it around. You put the banks in the back end and you are the front end. What's the next step? Would you become a bank at some point?
So maybe I say that's a very good question. We are not really coming to the front end. And that question comes up a lot actually with the banks. The bank, I believe, is still in the front end. So for example, some of the platforms that we offer, when your customer gets into it, you'll still see the brand of the bank. I see some of the banks in the room. I'm tempted to say their names, but I might be charged some more.
It's okay. You can mention. Which one?
They know themselves. So the bank will be seen in the front end, really, and even on the platform, like the payment gateway or the dashboards where you're seeing all these digital payments coming in. And then you'll just see the small powered by Ting, which is our platform, powered by Cellulant, powered by Ting. Yeah, so the narrative is not really changing. Maybe we are like this, and not that we are really coming to the front end. No, the merchant still belongs to the bank. So we're just powering those sort of payments. Yeah, so to speak. Yeah.
It's easier there.
Yeah.
Hi, Faye.
Hi.
Peter from Jumia. It's quite some interesting conversation there. But I have one question, but it's combined into two. Okay. So basically, the question that I want to ask you is, what are the unique opportunities that you see in payments that you feel from where you sit is not exhausted? Yes. And number two, which is tied to number one, is what's your take on supply chain in terms of business vertical? Thank you.
You're looking for consultancy, free consultancy.
Opportunity, supply chain. So opportunity, top of mind, which I didn't want to talk about when he asked what's happening at Cellulant, digital lending, where it has to get easier that when you walk into any shop or any store, that yes, you're paying by Ting. Some of our customers call us Ting Pay. So yes, you pay by Ting, but if I don't have sufficient funds, I should be able, whether it's a supermarket or wherever, to be able to get, funding to pay and, using the data, because data is one of our assets. So that's one big thing I see, not only within Cellulant, but just in the payments ecosystem. And the other opportunity, I think Africa is still at a point where the number of people who are unbanked is still very large. Yeah, I think it's still around 57% are still unbanked. That's like almost 95 million Africans, that's A. I think also Africa, cross-border payments are still very expensive. Yeah, that's two. And then number three, I think fragmentation is still a thing. If I open my store today, I still have to deal with MNO A, MNO B, and C, then bank, then card scheme, another card scheme. So just being able to offer a solution where fragmentation can be cleaned up, I think would be a big deal for us. And it's things that we are working on and launching, and I think is a big deal. So I think those are the three opportunities, top of mind, that I'll bring up, apart from what I've talked about before, because I think it is opportunity. If banks, no offense for the bankers in the room, would move quickly. Yeah, we take off our, I'm a banker, so I can talk about banks, right? I think I have permission. We take off our high ties and we say, let's move faster, partner with these fintechs, and tomorrow be able to offer X, Y, and Z to the merchants, both banked and unbanked. So apart from those, the banking aspect, I think those three things are the opportunities I see. You asked about supply chain, and I smiled because we've been having amazing conversations with the FMCG, and some of the things that we're doing have a bit of the lending aspect and lending to the last mile, where, let me give an example so it's easier. So if you look at the anchor FMCG merchant, let's say, let me not give an example, maybe let's call them X, and they have this whole list of distributors. So reconciliation is a nightmare for these people, So being able to just offer them the simple solutions that we have, whether it's in-store or pay by link, so that all the transactions come through that specific dashboard, then makes it easier. We were speaking the other day to one of the largest distributors in the country, and they were talking about how if Harry pays today to get stock and you use your number, if you come and pay tomorrow and you don't have, like, let's say the 10K, and so you ask Faith to pay for you.
Ian, I've seen you.
Yeah, and
we'll be done shortly.
Sorry, Ian. And so tomorrow you pay with a different number. Because they know Harry, they release the stock, but you don't know how to trace that sort of transaction. So there's the aspect of taking care of the recon aspect and how to digitize that whole ecosystem, because of course a lot of them is the trucks moving, picking cash, fraud is immense, and of course recon. So that's A. And then B is the last mile financing, which we're taking care of. I'm very excited about, because tomorrow that means any SME or distributor who needs stock doesn't have to do too much. For as long as we have that data, we pay the anchor merchant and they get their stock. Okay. Yeah, so that's a fantastic question. Yeah.
Evelyn, okay.
Personal female question. As a woman in tech leader, I've watched, I admire what you've achieved. I've watched your journey and listened to you. For me, it's more, how do you navigate the power structures? How do you also be able to navigate the different divides and opinions, especially in such a male-dominated field, with such a male-dominated team? So that's, for me, just for the women in the room, for myself, and I think I'm truly inspired just listening to you. Thank you.
All right, thank you. Thank you for that question. Wow. This is very personal for me, and I'm even writing a paper on it. It's titled, so far I only have the title and the thoughts are in my head.
It's supposed to be a book.
Yes, amen to that,
okay.
A book. And so the title is, I'm still figuring out the title, but as we break the glass ceiling, what else is breaking? Yeah, you guys should clap to that, right? I'm just kidding, but genuinely, I think there's so much opportunity for women. And I think it's shifting. If you look at Google in Kenya right now, it's led by a woman. If you think about Microsoft, Cellulant, and like so many other tech companies. So I think there is a shift, but I think we are not there yet. Yeah, in terms of just having the women representation. I can't tell you how many times I sit in meetings, whether it's within Cellulant or elsewhere, and I'll just take time to count, and I'll look around and be like, oh my gosh, I'm the only lady in the room. So it's still a thing. And as women, we must be able to break that bias, so to speak. And over the years, what will be in this paper is that I've sort of figured that out. I was reading a research the other day that was showing that most women get off at a certain point. When you start to become a mom, and things like that, and you're like, let my male counterpart take that over. Of course, again, because of aspects of imposter syndrome, maybe the leadership as well is not supporting this woman. Because having a creche and a place to, do your thing, and all that is not enough to support women. So I keep saying just having a creche is not enough, and so you'll find the leadership needs to be able to do more so that Faith is able to know that I can become a CEO and still sit on ABCD boards, still raise my 3 children, and, and do many other things. But I think women, need to have courage. Yeah, I sit in so many boards even where women just sit, You know, we need to be able to have courage to speak out. And no offense to the men in the room, but this is a tip for the women. I notice most times when you sit even in a board, like men will just speak even though I was talking. So just speak louder, you know, because like you'll notice a dude starts speaking and I was talking, just speak louder. I'll dare say this, don't serve the tea. My book will be good, but don't serve the tea. Serve tea at home.
Don't serve the tea.
Yes, don't serve the tea, because some of these things just make you, because at work, we're equal. At home, I submit to my husband. I'll serve him tea. But in the office, imagine we are the same, right? We are, right? If both of us are chiefs, we are both the same. Push away imposter syndrome. Everything we need is on the other side of fear. So stop fearing. It's okay if you think you're a fraud. Just do it anyway. You know, like just take that step and move forward anyway, because you're there, seated on that table because you have something to give. And whatever you need to learn, you'll learn. And my final point, which is the most important, what else is breaking? For as long as our support systems are not good enough as women, because the role we play at home is not what the man plays. So if our role is not fully taken care of, these glass ceilings, that glass falls and hurts us. Then tomorrow, people will be like, let's not give women these roles because they're not sorting us out at home, right? So I'll give you a personal example, Harry, if you don't mind. Mm-hmm. So one of the things I noticed is that most people say have a good support system, but that means what? My 3 boys probably have 3 nannies and a driver, and I'm not there. So one of the things I did is that I don't keep a live-in nanny, and I'm going personal. And why I did that is that way I'm able to make breakfast for my family every morning. Imagine? And I'll have to do that because that's the season I'm in. And I say this loudly so that the next woman can do the same thing and we normalize it. If a man today says, oh, I was in a meeting the other day, and a man goes like, oh, my wife is about to have a child, so the next few weeks I'm not able to join these meetings. And we were all like, ooh, ah. But if it was a lady, we wouldn't say the same thing. So let's normalize it. The first meeting I can have is at 7:30 because I need to handle some things at home. Yeah, and it's okay to say some of those things, you know. And then it makes it easier for this patriarchal society to begin to change, you know. So then, and then also women, finally, don't apologize for being expecting, right? Don't say, I'm so sorry, sir, you know, I just found out I'm pregnant. No, just be pregnant, but still be 150% present at work. You know, being pregnant, we are not sick up here, but so many times the few women who've gone before us make it look like it's sickness, so we are not hiring pregnant women. Hire a pregnant woman, but if you get hired, be present. When you come back from maternity leave, be present at home, but please be present at work. We have 100% ability to handle all those things. And please understand your season. So if you need to do all these things, you're still able to do them. But it can't be done. Let's go for it. And don't fear. Everything you need is on the other side of fear.
Awesome.
Buy my book.
It was impossible for me to stop Faith.
Sorry.
It was impossible. So your lunch will be about 20 minutes late. But I think it was worth it. Ian, just 1 minute. Tafadhali. No, it has to be 1 minute. Yeah? 30 seconds for me and 30 seconds for Faith. So in 30 seconds, Faith, tell us something that nobody in this room, nobody in Cellulant knows about you.
Nobody in Cellulant knows about me.
Yeah.
That when I was in campus, I used to do TV and radio. I worked for a TV station, so I did TV and radio. That was my first job.
No wonder.
No wonder what?
Thank you. Thank you for that.
Thank you, sir.
Yeah. Yesterday, Ahmed, we had one of the CIOs from Equity Bank here. And I asked him a question. I told him, you have one CEO, one CFO, one CMO, one CHRO, and 12 CIOs. Are you building a tech company? And he said, he almost said yes, but he didn't say yes, but he almost said yes. And when I listen to you, I want to ask you, are you building a bank?
No.
Okay.
I'm building a solid strategic partner for the bank.
Okay. Yeah. Thank you. Thank you very much, Faith. Truly appreciated. Awesome. Thank you.
We can make emergency medicine possible at 40,000 feet. Instead of burning our past for power, we can harness the energy of the tiny electron. We can create new ways to connect, rethinking how we communicate to be more inclusive than ever. With app, cloud, and anywhere workspace solutions, VMware helps companies navigate change faster. VMware, welcome change.
All right, fantastic. Welcome back, ladies and gentlemen. We're good to have you here. Help me, first of all, before we proceed, give a round of applause to Faith and Harry. We appreciate that. Thank you very much. And now we want to discuss about securing the digital bank. And to guide us through this particular discussion is a man who has over 20 years experience in information security, risk, and compliance while holding several roles in various capacities in the corporate leadership, management consulting, cybersecurity engineering, and architecture to various industries such as retail, telecommunication, insurance, government, and finance. He is currently the Chief Information Security Officer at Africa Fintech Solutions. Ladies and gentlemen, let's put our hands together for Russell Okoth.
Hey, good morning, Kenya. Good morning, Africa. Can you hear me clearly?
Yes, we can hear you. We can hear you.
Well, thank you. I appreciate it. I definitely appreciate the opportunity that you've given me to appear here. Definitely, it's a digital world. I'm actually in Austin, Texas, on work travel. So by names, I'm Russell Okoth. I hail from the western part, so we are allegedly night runners. So this is night running digitally. You know, it's about 2, 3 a.m. my time. But definitely welcome and feel honored to be among you folks, especially the opportunity that Kelly and Harry has created for us. Definitely come up trying to offer you what my experience has been in fintech, and also just around securing the digital bank. Definitely, it's a tough act to follow after Faith. Impressive, and if you're looking for 40-year-olds plus to talk to, definitely I'll be more than happy to share what my experience is after 40. So let me share my screen, and then we can take it from there. All right. I'm not certain if you can see my screen. This is the first time I'm doing this from very remote, but if I can get confirmation from the team, I'll be more than happy on that. So,
Russell, this is Harry. Yes, we can see your screen.
All right, appreciate it, Harry. So anyway, just to start off, like I said, my name's Russell Okoth. I've been in information security for about 23 years now. I joined information security when it was not the new sexy. I joined it pre 9/11, and unfortunately, with the 9/11 events, then the industry took off, and from there, then we were able to. Obviously, after 9/11, everybody became curious about security and then the evolution of times. And then from there on, what has been the precipitate of the market, and also the digital transformation, and also just the changes of times, and just being sometimes in the right place and the right time. So one thing which I wanted to share with you from me is that I started off working help desk, did not enjoy it so much. It was monotonous, repeatable, and knowing my nature, I started looking up for what's the next opportunity that I can get to be able to move on beyond just help desk, and something challenging, something that would offer me opportunities for growth. I then joined an Israeli company. I worked for about 5-6 years, and then moved on from there to the various verticals that the MC introduced. Personal note, I enjoy staying active when I can. I'm an avid cyclist. With the coronavirus, I think the last 2 years I've cycled over 12,000 kilometers. I enjoy yoga. I also grew up and went to high school in Nairobi, so definitely a Changerian at heart, and play rugby, and a big proponent of the sport as well. My pride is my family. I have a wife, 2 sons, a college-going kid, as well as a high schooler, and 2 dogs. In typical Luo fashion, they're called Jatela and Jaber. The last book I read, it's The 5 Dysfunctions of a Team by Patrick Lenchon. So what I'm going to try and cover in this short span of time, definitely, and hopefully you can be able to take something back, is who am I, what I've already told you, the expectations of what a digital bank is, the challenges, and also how we can go about securing a digital bank. First and foremost, I would like to air out the disclaimer that this is definitely not a professional advice, thanks to my lawyers. This is just a statement of facts and opinions, as well as experiences that I, the presenter, present to you, and nothing of that is contrary to that, will only be the company's. So I'll take it off and just go from there, and let me see if I get the controls. So I was doing some research, and I ran into this about what are the expectations of a digital bank in today's. There's a foundational, there is a market level, and then there's also the differentiator. Obviously, each generation that we face as providers of this service have different banking preferences, expectations, and their interactions with financials changes. Whether you're a Gen Z, a baby boomer, or even a Zoomer, we need as a whole to come out and understand the different audiences that we are trying to provide services to and leverage for. You know, the expectations for the digital experience are being set by people's personal interactions, not only with their primary bank, but with other fintechs or with travel agencies and stuff. They get a digital experience and then compare it to what maybe they expect that to be. As you can see in this survey, the primary and foundational element, up to 90%, has been to keep personal information secure. So security is no longer playing a supportive role, but security is part and parcel of the business. We do enable the environment, we do encourage the environment, but in many organizations interviewed, or many end users interviewed, you can see up to 90% wanted the information kept secure. They want flexibility, where to bank and how to bank. They also just want ease of digital experience, as well as then the last of that, which scored lowly, was how much do you care for them as a customer. So that's really what makes you differentiates you from the others. But the general expectation is that their personal information is kept secure. I think one of the gentlemen from Equity yesterday pulled it out when he said that we, the bank, are just custodians of data. So definitely keeping it secure is our primary goal in this. The challenges, leaps and bounds of challenges, obviously. We have skill gaps. There's about, right now, from the ISC squared last survey, there's about 3 million professionals worldwide. There's a shortage of 3 million professionals. It almost seems like if we can produce about 89% churn rate of information security professionals, then we're able to meet that gap that is being created right now. 2/3 of that is actually in the Asia Pacific, but for most part, Africa, Europe, as well as the United States, carry about the other third of the shortages. We see APIs, definitely open banking, cyber insurance, data protection and legislation. There's variances, the cost of compliance is becoming very expensive. But from my experience and also experience of many others, we know that compliance is not necessarily security. A lot of the organizations, Sony, you name it, that you've had, Target, any of those big names you've seen on the news, those were compliant organizations. But what exactly transpired? Third-party risk becomes another challenge that we have. There's targeted attacks, there's cloud computing. Cloud computing presents itself in terms of speed, in terms of skill set. The way you run identity access management in one cloud tenancy is not the same. GCP handles it a certain way, AWS will handle it a certain way. If you go Alibaba or you go whatever cloud of your choice is. Malicious insider. Those still remain our very, very own. And as an insider, one thing which I always tell the board as well as my senior management is that the insiders are not only the employees, they're not only the IT personnel, they're not only the business supporting teams. Our insider includes our customers. We refer to them as insider and handle the same controls because these are people we've given access into our networks. So they're able to introduce, whether if their endpoints or their mobile apps are infected, that would be part and parcel of them infesting us. Cryptocurrency is another obviously controversial. Adoption is either slow, it's unsteady, free of regulation. Do we regulate it? It comes from creating a democracy and what it's all about. Obviously, the last 2 years with the pandemic, remote work became another challenge. The perimeters moved where before you went into a building, you were protected, you had an access, and then there was a fire exit and emergency care. But then right now, what really happens with remote working is that you have to protect every other laptop, every other end user that's out there. That's your fence. So your fence is distributed. How do you protect that? That's one of the challenges that's coming up. Legacy infrastructure. So technology is really piling up. Obviously, digitization is driving it up. 5G is deployed just in parallel with Wi-Fi. We have mobile systems deployed as well as workstations. DevOps has redesigned applications, but we still have applications that have to run on server. So legacy is very notorious, especially in the financial industry. So we, as the CISOs, as well as the information security teams, we have to worry about that security because you are just as strong as your weakest link. So you could have all the latest of technology, but you still will remain challenged with how do you protect legacy technology? How do you protect infrastructure that probably the knowledge or even the updates have gone? The latest SolarWinds, Kaseya, all those were from legacy infrastructure, which then started making traversal movement along the networks. Now, to the main point that I wanted to bring about is really how do we go about securing a digital bank? Security is complex, but we don't have to make it as complex as it seems to be. Easy ways to have is to go through it is just 4 strategies with different goals within each strategy. One is vigilance. We as an organization with a tone at the top from executive support, it's not just a matter of it sounds good or it's a good press release. The executive at the top need to set up the tone on how we create a culture that fosters best cybersecurity practice. So cybersecurity training, awareness, and education. You have to create a program where you're educating the end user, your employees, your contractors, your third party, your vendors, and you're not waiting for them to just once a year so you have to check a box. That's compliance. But in security, you have to keep it top of mind. So repeated messaging, creative messaging, having people dedicated to that, and even using your learning and development team to dole out that information. The other part is how aware are you of the threat of your threat landscape? How much intelligence are we sharing as banks? How much intelligence are we rotating around as financial organizations? It's important that we have both private and private, public, as well as government sectors coming together to share some of the threats that we currently. I know there's adversarial relationship in terms of competing for market space, but at the same time, we call it wartime because we're facing the same enemy. So sharing some of this information will help us develop our threat intelligence platforms. Other part is secure, is to how do we secure? We use cutting edge technology to protect assets. Identity and access management is definitely a new frontier. I've been involved in a lot of identity and access management projects. They can be costly if not run properly. They can get away real quick, but at the same time, you have to know who you're admitting into your network, what they have access to, and what can they do. So the controls needs to be there. It's like letting somebody in your house. You have to know where they are, what rooms they can go to, and even if they come to your room, are they free to enter your drawers? Are they free to enter your cupboards or your closets? So that's part of identity and access management. It means joiners are given the right access, no more, no less than they need to do their job. Movers, when you change jobs or you change positions, we either add or remove that access from you. And then leavers, as soon as they terminate or leave the organization, then we are able to eliminate that. The complexity is added on, obviously, with the cloud coming, where nothing is stationary. You have different methodology. And that's why it's important to have a very central role-based access where you're able to terminate at one point and propagate that change. Endpoint protection. Our laptops have become our fences. What we run on them, our mobile devices. People want to access, get to work when and wherever they are. So what do we deploy at that? We have endpoint detection and response systems that you can put at the endpoints. You can automate deletion and and curtailing of indicators of compromise. You can quarantine systems that show anomalous behavior. You can also deploy things like user behavior analysis on the endpoints that are able to monitor the behavior and base your endpoints normal, and at any time that you show anomalous behavior, you're able to pull it off. The other point I cannot stress enough is protect data. We have to protect data. We have to protect data. We are simply custodians. It does not belong to us. We keep it. We add value to it. We use it to add value to our processes. But at the end of the day, that data does not belong to us. It's entrusted to us, and it's therefore a moral as well as a professional obligation to protect the data. Somebody's name, somebody's PIN, somebody that will never belong to us. So that's one. The other part of the cutting edge technologies, senior management. Somebody had 12 CIOs, chief risk officers, whoever this CISO or the head of security is reporting to. Let's support these teams to be able to invest into newer technologies. Remember, we are always playing catch up. There is no single time that we are ahead of the bad actors. They don't have rules, they don't have compliance, they don't have regulations that they abide by. They share information openly in the dark and deep web. So things like micro-segmentation, zero trust, SASE, those are things that you can look into and see how can I deploy it and how can I deploy it in a cost-effective manner as well. Not every cutting edge, every sexy solution out there is meant to be used. So that's why you have to know your risk and know what will be the best solution. You definitely have VMware in the audience, and if you have time, please visit with them, find out and explore things like micro-segmentation and zero trust and how they deploy that. They've been good partners to me as well in many years across, and this is not paid advertising for them, but just somebody, a trusted partner that can offer you, can be a partner in helping you get where you're trying to go. Resilience. In today's world, it's not a matter of when, or it's not a matter of if I'll be hacked. You will be hacked. And when you're hacked, what is the next thing you'll do? Or when you're compromised, what will you do? So it's important that as a digital bank, you have a very sound incident response and crisis management program. That program should be well planned, should be kept updated. You should exercise it, have different stakeholders that exercise it, so that every person who is a stakeholder knows their responsibility in the event of an incident. Your end users, your customers, they should know how to report an incident, how to identify it. Have a team dedicated that can receive, triage, and determine whether an incident is actually impactful or does it not impact us. Also use your threat intelligence that you carry to inform your incident response. Use your threat intelligence to do some threat modeling to inform the exercises that you carry. And then work with your regulators, work with your legal team to see what are some of the disclosure, what are some of the notifications, the third-party contracts that you get into, what do they require you in the event of an incident, who's your contact, how much time do you have before you let the other team know. And then the final part is the governance, and a proper IT governance that promotes cybersecurity. That starts with the policies, it starts with the standards. It also controls and frameworks. What I've put on the right are some of the risk control and frameworks from the National Institute of Standards and Technology I've used over time. They're not necessarily mapped one-to-one with the boxes that they're in, but they've been frames of reference for me to use to build controls, map out controls, even take regulatory needs and map them to controls. CIS control is a good place to start, where you have it's categorized into 3 families, and you start with the top 5 for just general cyber hygiene, but that reduces a very big percentage of your cyber risks. So knowing your assets, knowing your software, things like that, identity and access management, privileged access, all that. You also need to carry out audits and risk assessments of yourself. You don't have to wait for a regulator. Have a team that can carry out a risk and control self-assessment so that you could know where exactly you are at that particular time. The other big part, and as you can see, most of the incidents and big names you've heard of have been caused by a third party. Target was an air conditioning unit. A lot of these people, a lot of the contracts we get into, once we've signed the deal, no one keeps a diligent eye. So we need to find a way where our contracts obligate our partners to securing your data. Part and parcel is having a good data governance program that stipulates how data is handled and is able to keep track of data across the lines. So with that, I think you should be able to build a program that should be able to sustain you over time. But one thing which I would urge also is in our profession is also just a change of mindset. The change of mindset is big because we have a big skills gap. About 9 days ago, I was talking to a group of students organized by a Kenyan group, SheHacks, and there's a very big pool of youth who are eager. And us as leaders who write the job descriptions need to start writing better job descriptions. We need to start making barriers and market entry barriers a little lower, but more have some governance and supervision to develop this young talent. I think one of the biggest risks that we have is the shortage of personnel coming in. I'm also a very big proponent of women in technology. I've been blessed to hire several who've been the rock stars of the program. So that's another thing we need to look at, promote to hire people who don't look like you, who don't speak and sound like you. I know how it feels to be a minority, trust me. I belong to a group here that supports minority and advancement of women in technology. And I think with that, I come to the end trying to have squeezed in enough time because I know there was a lunch break coming in. So if there's any questions, maybe the studio can relay.
Hey, Russ, thank you so much. I don't know if you can hear the clapping.
No, I appreciate it's an honor. This warms my heart that, for years I've come home. I was supposed to be home, so it would have been nice to be in person, but work travels. And I've craved for opportunity to be able to touch base back with home and stuff. And, when I sent the email to you, Kelly, and staff and told you to use me, I did not expect a response in good time. And I remember our first meeting and also speaking to Harry earlier on this morning. But I appreciate the opportunity. I hope I can, people in the audience, I'm available on LinkedIn. Please reach out. I'm very open to, 24 years I've been blessed to do this. I've never had a Monday blue, but at the same time, I don't have a cellulant to pass on. But what I have learned, I would be eager to leave it as my legacy, pass on that information.
Russ, I think, and it's true, guys, he reached out to me on LinkedIn and just dropped me a message, and his words were, I want to give back to my home country, how can I participate? So I applaud you for coming in, and I know that you were meant to be a panelist and we made you a speaker, but thank you so much for the effort. And yes, everyone, you can connect to Russell on LinkedIn. If you've got any questions at all, you can fire them to me and I can connect you to him on email as well. But thank you so much, Russell, for coming in. I really appreciate your time.
And before I drop off, one thing I wanted to urge as technologists, mental health. It's very important. We're in a very stressful time, so let's all find an outlet.
Yeah, I think that deserves a clap. Thank you so much, Russ.
Thank you. Have a good day.
All right. Thank you, Kelly. Thank you.
Can you guess where I am? I am super excited because we are launching DX100. Formerly known as CIO 100 and hosted across some incredible venues in Kenya. This year is going to be just the same, if not better. We're super excited to invite you to DX100 this year, and the difference this year is for the first time ever, we are going to be celebrating and awarding people outside of the tech environment for their impact and their influence on digital transformation across multiple industries. Of course, the CIO remains at the heart of digital transformation, and we will be celebrating them in that way. However, this year we'll be celebrating CFOs, CMOs, CEOs, and businesses all the way across Africa, so not just from East Africa. We are so excited to invite you and to launch the DX100 Awards. Put your entries in and we'll see you in November.
Fantastic. That was so much fun. Okay, so we want to go to a speaker who is here with us. He's going to be joining online. This is Bob Seaman, who is the managing partner at CyberCab, and is going to take us through unbundling Bitcoin, all right? So, unbundling, sorry, Bitcoin. So let's hand it over to Bob to take us through that, all right? Ladies and gentlemen, help me appreciate Bob with a round of applause as he comes to take us through this particular session. Thank you.
It is a pleasure to speak to you today at the Africa Fintech Summit. My name is Bob Seaman, and I'm a California attorney, electrical engineer, and businessman. I've also written a book, The Coin Men, which is the most comprehensive critique of Bitcoin. Bitcoin is a confidence game with the excitement of gambling, the viral marketing of a pyramid scheme, and the fake profits of a Ponzi scheme. Bitcoin trading provides the appearance of legitimacy, but with no regulatory oversight, it is manipulated by the major owners. Bitcoin is not money, not a store of value, not an investment, and not even an asset from an economic perspective. Bitcoin is simply unlicensed gambling. So what is Bitcoin? Forget about all the jargon about blockchain and decentralization. It's all irrelevant. A light bulb is a light bulb because it helps you see in the dark. It's a light bulb regardless of whether it uses an incandescent bulb or an LED bulb. It does not matter how Bitcoin works. What matters is what Bitcoin does. There's no need to look at the technology of Bitcoin. The Bitcoin promoters love talking about what the technology of Bitcoin is, the blockchain. they think they have found something new and unexplored. Blockchain is actually a combination of technologies going back to the 1980s. Promoters are using blockchain technology jargon as a distraction, much like a magician who distracts while he steals your watch. Bitcoin operates like a Google spreadsheet readable by everyone in the world. It is a record of all Bitcoin transactions going back to Bitcoin's invention in 2009. Bitcoin is very slow and limited. The only thing interesting about it is how the spreadsheet is updated. So how do you keep somebody from rewriting the history of Bitcoin transactions if everyone can get a copy of the public ledger? Which version of the ledger is accurate? Many people are holding copies of this ledger all over the world. That's where the mining comes in. All mining is the purposeful waste of a massive amount of electricity to prove that the record is intact. Anyone who would want to attack the record has to waste more electricity than all the other honest miners put together. Without the waste of a lot of electricity 24/7, 365 days a year, somebody can rewrite history cheaply. Traditional money transmitter intermediaries are under legal obligation to block bad activity. Bitcoin eliminates intermediaries by making everyone's balances public, but pseudo-anonymous, on a single ledger, the Bitcoin blockchain. An individual is represented by a long sequence of random-looking numbers, but remains pseudo-anonymous. The Bitcoin public ledger is like a public ledger in a town square, so that everyone's bank balance is public, but identified only by pseudonyms. For A to pay B, B checks to make sure that A's pseudonym has a balance, and if so, posts that transaction to the public ledger. Now everyone knows that A's pseudonym is down by a certain amount of Bitcoin, and B's pseudonym is up by that same amount of Bitcoin. Bitcoin is not a good medium of exchange. Few merchants accept it, few people want to spend it. The people who own it hang on to it to sell it later when it's worth more. Why would they want to part with it just to buy a coffee? They certainly don't want to be like that guy in 2010 who bought 2 pizzas for 10,000 Bitcoin. That's a couple $100 million today. Less than 0.15% of Bitcoin transactions are for legal goods and services. Bitcoin is used for more illegal purchases than legal purchases. While companies may say, we accept payments in Bitcoin, they're almost always simply using a service that allows the merchant to price in US dollars, present the Bitcoin price to the customer, transfer the Bitcoin, and turn the Bitcoin into US dollars. The merchant simply receives US dollars. Modern finance requires that electronic transfers be reversible for a short period of time. It allows an undo in case of fraud. The ability to reverse transactions does not exist with Bitcoin. Bitcoin is not a good medium of exchange. Even in El Salvador, where they made Bitcoin forced legal tender, very few people used it. It's forced legal tender in El Salvador because accepting Bitcoin is not an option. Every person and business must accept Bitcoin. Also, everyone was given a Bitcoin wallet and a free $30 of Bitcoin. However, most simply cashed in the Bitcoin for US dollars. Very few transactions are being conducted with Bitcoin in El Salvador. It's been a complete failure. There's been almost no new adoption in 2022, and only 1.6% of remittances the rationale for the introduction of Bitcoin are in Bitcoin. Bitcoin does not bank the unbanked. If Bitcoin investors really cared about the unbanked, they might want to consider investing in improving systems that work, such as M-Pesa. Bitcoin is not used as a unit of account. Even conferences about Bitcoin price their tickets in US dollars. Bitcoin is not a good store of value. It regularly drops 10% overnight. 4 times in the last 4 years, it's dropped by more than 50% over a few weeks. The main reason that Bitcoin fails as good money is due to high volatility. This volatility gives the clue as to what Bitcoin really is: gambling. Many Bitcoin promoters have finally realized that Bitcoin is not money. They now argue Bitcoin is digital gold, that it has all the properties of gold. Bitcoin is completely different than gold. The characteristics of gold over thousands of years are non-corroding, it's shiny and wonderful to look at, it exists in limited quantities, well-known globally, difficult to counterfeit. It's a soft metal for processing for jewelry, industry, coins and bars, and it has unique electrical properties. Half of the gold produced every year is used for jewelry. 10 to 20% is used for industry, and the balance for coins, bars, and bank vaults. Gold is valuable because it is useful. Bitcoin has no legal utility. The price of gold is stable. The price of Bitcoin is not. Gold is inversely correlated to the market. Over the last 2 years, Bitcoin has been correlated to the market at least 50%, and recently over 80%. At the surprise moment when Russian tanks went over the border to Ukraine, Bitcoin tanked, gold did not. Artificial scarcity does not create value. There are thousands of other crypto, more being made all the time. And the major competitor, Ether on the Ethereum network, has no limit. Ether and Bitcoin are correlated 80% to each other. The market sees them as similar, and the crypto exchanges are continually and instantly converting them one into the other in high volumes. Also, there's regular forks. That just means that people can create other types of Bitcoin. There's Bitcoin Cash, Bitcoin Satoshi Vision, BSV. What happens then is the amount of crypto doubles. Marks are people who lose money in a scam. At its peak, 100,000 Americans were buying their first Bitcoin every day. 20% of those buying were buying on credit, with money they could not afford to lose. Over 75% of Bitcoin owners are now underwater. They bought it for more than it's currently worth. 28% of millennial Americans are buying crypto for their retirement. They are the marks. The trading by Wall Street professionals has added legitimacy to Bitcoin. At the same time, there's trading by major holders who manipulate the price of Bitcoin. Corporations have seen huge profits being made in Bitcoin, and they're getting FOMO too, the fear of missing out. They want some of that action, and that's included Wall Street institutions and large law firms. They too have provided legitimacy. And then there's all the lobbying. One of the biggest lobbies in Washington, D.C. is now big crypto, the crypto industry. They've been lobbying the regulators and the politicians. While crime is being conducted using Bitcoin, it is essential to examine the Bitcoin ecosystem itself. Governments should examine Bitcoin as gambling for every purpose, including enforcement of gambling license requirements, payment of license fees, disclosure of all the rules of the game, proactive prevention of cheating, and advertising restrictions. Bitcoin trading profits should be treated as gambling profits. In the United States, they should be treated as income and not as capital gains. Also, it's very important to protect our youth from gambling addiction. The more that Bitcoin is regulated as what it is, gambling, the less it will be easily used, and the more difficult it will be to use it for crime. One of the promoters of Bitcoin is a Wall Street institution called Fidelity Digital Assets. Their rationale to buy Bitcoin is based on 3 points: that Bitcoin is a store of value, it is a monetary good, and Bitcoin benefits from the Lindy effect. As examined earlier, Bitcoin is not a store of value. Now let's discuss the other 2 points. Fidelity argues that Bitcoin is a monetary good. They define monetary good as a good that is valued for its tradability for other goods, not its consumption. They define money as a tool that allows exchange rather than barter. They state that the more of the following characteristics that a good possesses, the better it can serve as being money: durable, divisible, fungible, portable, verifiable, scarce, and having a track record. While Bitcoin may not be a monetary good, good as in goods and services, Fidelity does not conclude Bitcoin is good money, good as in useful. Fidelity is simply saying that Bitcoin has some characteristics of a medium of exchange, not that it is good money. Because the words sound the same, some Fidelity clients may not understand the distinction between monetary good and good money. The 2 phrases mean something substantially different to each other. Therefore, the monetary good argument is either irrelevant or misleading. Fidelity's other rationale to buy Bitcoin they call the Lindy effect, which they describe as: the longer that some non-perishable thing survives, the more likely it is to survive in the future. Fidelity argues that since Bitcoin continues, despite all the challenges it has had since it was invented in 2009, it is more likely to survive in the future. It compares Bitcoin's longevity to more recent crypto. The existence of the Lindy effect is not validated. Many information technologies are inconsistent with the Lindy effect. DVDs, faxes, iPod, newspapers. Even if the Lindy effect was valid, Bitcoin has been around only for a very short time compared to fiat money or gold. And it even has not started to be useful. Therefore, Bitcoin can disappear at any time. The basic Bitcoin rationale, decentralization, is a myth. There are many aspects of Bitcoin which are centralized. 90% of the mining is performed by 10 organizations. 40% of the Bitcoin is owned by about 1,000 people. Almost all the exchanges are centralized. 5 of them have half the volume. Some of them are owned by the big Bitcoin owners. Stable coins, which are the key to trading Bitcoin and other crypto, are all centralized. The Lightning Network, which speeds up Bitcoin transactions, re-centralizes. What is decentralized finance, or DeFi? It's new financial products and services that broaden access and undercut traditional financial intermediaries. There's 3 aspects to decentralization. Decentralized architectures use digital ledger technology, DLT, maintained on multiple computers and synchronized in real time. Decentralized trust involves the validation of transactions through public consensus mechanisms rather than by trusted intermediaries. Decentralized governance is underpinned by a collective interest in maintaining the system's integrity and security. However, there's many limitations: technical, financial, business model, and regulatory. One business model limitation is that DeFi is currently based on stablecoins, which in turn are often partly backed by Bitcoin and other crypto. One technical limitation is that DeFi is based on so-called smart contracts. One regulatory limitation is that securities law applies. Other laws also apply, such as anti-money laundering and know your customer laws. If code was law, then somebody could simply find a bug in a smart contract and take everyone's money. Then say, well, that's what the code allowed me to do, so it's my money. The code is law, therefore the law says that it's my money. A lot of DeFi assumes that securities law doesn't apply. The key question with securities law is this an investment contract? If it walks like a duck and quacks like a duck and swims like a duck and flies like a duck, it's a duck. However, the regulators do not want to stifle innovation. The message I am explaining to regulators is that there's little innovation to stifle. Much of the current regulation model is let's pick up the pieces afterward. However, stopping things from falling apart in the first place would save billions of dollars of investors' money. A central bank digital currency, or CBDC, is a digital currency that is the liability of the central bank and not a commercial bank. It's the digital equivalent of a printed dollar. Bitcoin uses blockchain distributed ledger technology, or DLT. Some CBDCs may use DLT, but major central banks are skeptical of DLT for technical and regulatory reasons. The US Fed is considering a CBDC, but it appears they will not adopt one for at least the next few years. The US Bankers Association, the ABA, put forward their position to the US Fed in May. Their arguments are as follows. A CBDC is not likely to promote financial inclusion. Free and low-cost bank accounts are widely available at US banks of all sizes. The benefits of a long-term banking relationship go beyond a deposit account. A CBDC is not necessary to maintain the dollar's international role. A CBDC would risk undermining the important role banks play as financial intermediaries. A CBDC would exacerbate a stress event as consumers opt out of private money. A CBDC would likely balloon the Fed's balance sheet and impede the transmission of monetary policy. We must carefully balance the need to prevent financial crimes while protecting privacy. The Fed would be taking on an entirely new role for monitoring customers and their activity. Physical currency, unlike CBDC, is bulky and difficult to move in large amounts. A CBDC would expand the role of government. The Fed would risk becoming politicized as the central point for monitoring and potentially denying transactions and making decisions about the allocation of credit. It has been a great pleasure speaking with you today about the new world of crypto. Thank you.
Right, welcome back, ladies and gentlemen. And now we are about to get into an interesting panel discussion. And this panel discussion is going to be moderated by a gentleman who is an experienced data and AI digital professional in the East Africa region. His specialty is in the banking and financial sector services, where he's been able to master the development and execution of key data strategies for large banks and financial institutions. He was previously the head of data and analytics for Cooperative Bank of Kenya, where he set up the bank's data office and delivered a comprehensive data strategy for the enterprise. He is currently the Chief Data Officer at Absa Bank Kenya. Ladies and gentlemen, help me appreciate met with a warm round of applause Hartnell Ndungi as he comes to the platform to introduce his panel for this discussion. Thank you and welcome.
Thank you. So thank you so much. I hope I'm audible. Am I? No. Great, thank you. So I'd like to call onto the stage my fellow panelists. So number one, I'd like to call on stage John Ara. Please clap for him as he comes on stage. I'd like to call on stage Michael Michier. Please clap for him as he comes on stage. Sean Owoye, please clap for him as he comes on stage. And lastly, Mutembei Kariuki as he comes on stage. Just have to sit anywhere.
Fine. Okay, let me take it.
It's fine, thank you. Yeah, so thank you so much, gentlemen, for joining me onto the stage. I think the first place you can start off is a round of introductions. So I think I can start with you, Mutembei. Please state your name, the company you work for, and your specialty. Thanks.
Thank you. My name is Mtembei Kariuki, and co-founder and CEO of a startup called Fastager. We're building a Web3 platform for commerce where we help SMEs to understand the data that's coming into their company so that they can understand their customers better and so that they can engage with them using coupons and tokens on a blockchain, which at this moment is probably not the best thing to be talking about, but I'll explain more later. And so my specialties are particularly around data analytics and also blockchains. Thanks.
Thank you so much. Next, Mike. Can go.
Good afternoon, everyone. Michael Meshi. I'm the CTO at Solve Kenya and Standard Chartered Venture. We specialize in B2B marketplace for SMEs. My specialty, I think, is just technology. I don't like picking a spot.
Thank you so much, Mike. Sean?
Good afternoon, everyone. I hope you can hear me. My name is Sean Owoye. I know most of you guys actually call me as Sean. I work with the IPSL, home of Pesalink. I've been working with Pesalink now for about 3 years. Prior to that, I was working with a company called NIPS in Nigeria. Basically, I lead technology and operations at IPSL. It's a pleasure being here today. Thank you.
Thank you so much. John?
Hi, everyone. My name is John Kumar. I'm the founder of Ardenian Labs. My specialty is building stuff.
Thank you so much, John. I think we'll start with you then, John. And I think the best place you can start with such kind of a topic is just demystifying how we use ML and AI for fraud detection. So for the purpose of bringing the audience up to speed, how are we actually applying